Hello, everybody. Can you hear me? Right, great. Might just wait a couple more minutes for everyone to come in from outside. Welcome to the first Enterprise Blockchain Conference in Brisbane. Brought to you by ELAS, which is my own company, KU Tech, which is run by Lise Lee, who I also work with at Bitcoin Association, Panda Angel, who we'll be hearing from later, who have a very interesting project, and the Australian Blockchain Metaverse Association, thanks to Robert Lee. Yeah, we'll get into things in a couple of minutes. I'm glad everyone found the room. This place is pretty huge. Okay. We'll get started in about 30 seconds. Oh, I see my timer's already going. All right. Well, thank you very much for coming, everybody. The agenda for today, we're going to have 3 speaking sessions. So I'm going to take everyone through the speakers. I'm going to have some opening remarks. Then we'll have our first session. Each speaking session will be followed by Q&A. So if you do have burning questions for a particular speaker, please just hold them until the end of that session, and we will have a 20-minute Q&A at the end of every session. Then there's morning tea, lunch, and a networking function at the end of the day with some drinks, which will just be outside. So, I'm Brendan. I'm your host. I've been in Bitcoin since about 2017, and I was just wondering, with the lectern here, can we get the notes on this screen? We can't do that. Oh, that's sad because I have all my notes. Yeah, so I've been in Bitcoin since about 2017. It's a very interesting place to be, and when I first joined, it was really an industry at chaos with itself, and it still is to a certain degree. There's a lot of, crypto stuff that's out there that's happening. But anyway, in the 5 years that I've been in the industry, things have evolved a lot, and we're in a place now where we can start to offer some very serious enterprise solutions to people. And I'm very happy to be here today with some of the best companies and people in Australia delivering these solutions and to show them to you here in Brisbane. So our first session, hopefully if he makes it, is with Morgan Coleman from Lament. His wife is having a baby today, so if he doesn't make it, I will not hold it against him. James Belding from Tokenized will be telling us about smart contracts on a scalable distributed ledger. Tokenized is a great project, quite close to my heart. Eli from AMLA and Anon Survey will be taking us through his new project, Anon Survey, which, I've got the wrong text there, sorry about that. This is all very last minute. In session 2, I'll be speaking, talking about delivering on the promise of Bitcoin. Then we'll hear from the co-founder of ELAS, Mohammed Jaber, about private ledgers on public blockchain infrastructure. Then we'll be hearing from Paul Chiari from MetaStream. MetaStream is a company up in Cairns, and they are delivering volume blockchain access solutions. So if you need to publish millions of data points to a public ledger, MetaStream are the guys to be speaking to. Then we're going to hear from Daniel Keane from Predict Ecology talking about how he is using Bitcoin SV to capture data for ecology and artificial intelligence. Michael Choi from Panda Angel is going to be telling us about My Fabula, which is a new way of telling your personal story. And Robert Lee from the Blockchain Metaverse Association, who will be, and again, I'm sorry there with the incorrect text, telling us about crypto mining future industry in Australia. Finally, we'll be hearing from Cynthia Kai about triple entry accounting with blockchain, and Lise Lee from KE Tech about building on a scalable blockchain. But I'd like to start by talking about Bitcoin. What is Bitcoin? Bitcoin really is just the system that was outlined by Satoshi Nakamoto in his 2008 white paper. It's a highly scalable timestamping service for transactions. It's not an investment product. It's not something that you buy and hold and get rich off. It's something that you can use to build, something that you can use to access ledger services. So we're not here to sell you anything today. We won't be talking about investment or giving investment advice. Today is all about using the blockchain in the way it was designed. So Bitcoin is simple. At the core of it, the Bitcoin protocol has just two message types, a transaction message and a block announcement message. This makes it very simple. It means that the rules can be upheld. It means that we can move forward and scale massively without having to change the protocol. And by not having to change the protocol, it means that anybody who's building on top of that protocol can have certainty that the things that they are designing, building, and releasing with their enterprise customers will operate for many years into the future without having to be modified all the time because the underlying protocol keeps changing. And this is something that we see a lot in blockchain and cryptocurrency, protocols evolving every 6 months and really making it very difficult for projects that use those protocols and use those blockchains as infrastructure to remain operational and remain reliable. So the other thing about Bitcoin is that it's scalable. There's a lot of misinformation out there about how scalable Bitcoin is, but the reality is it can handle massive growth. We can handle millions of transactions a day today, and that is only going to get better as we move forward. So Bitcoin is not crypto, and really we are in a process of breaking the link with crypto and Bitcoin. Like I said before, we're not here to sell an investment product. Bitcoin is just a network running a protocol to manage records. Now, on that network, there is a native unit of account, but that unit of account is useful for far more than just investing or hodling. It's actually a core piece of a lot of the technology that we develop is taking those Satoshis and using them to hold value-add information. So taking something that's worth about 1/10,000th of a cent and using it to manage something that might be worth $1 or $1,000 or even $1 billion. Bitcoin is not a ticker symbol. And what we've seen over the past 5 years is an industry so at war with itself that it has tried to kill the original idea of the protocol. And twice we've had to mount fairly aggressive defensive processes, first with Bitcoin Cash and again with Bitcoin SV, to prevent what are essentially malicious changes that break the underlying economics and underlying viability of the system. And that is how we've ended up on the BSV network with Bitcoin, a highly scalable, ready-to-use, enterprise-ready blockchain. And so this is what we use here at ELAS. This is what we teach at the Bitcoin Association. It's the only blockchain that we're affiliated with, and it's the only blockchain that we'll be hearing about today. It's a very scalable blockchain. And when I talk about what is scale, I'm really talking about hundreds of millions of transactions per second. Because if you think about it, 10 billion people, each connected, each using, say, 1,000 transactions a day, that's over, well, I had it worked out in my notes, and I don't have them, but I think it's something like 10 trillion transactions a day. It's 100 million transactions a second, and it represents about a terabyte of transactional information every 10 minutes. And that's possible today. We can do that today from an infrastructure perspective, storage, networking. That's not hard. YouTube does 10 times that volume and they lose money. You know, it's the whole thing about achieving that level of scale is so that network miners can achieve profitability. There's no longevity in a system where the only means to profit is by gouging users on huge transaction fees. What we need is massive volume with tiny transaction fees. So we're talking 100 million transactions a second, 1/1000th of a cent per transaction, and that is still enough to generate something like $100 million a day in revenue for miners. So for 1 cent per person in the world, 1,000 transactions each. And you know, that's really what this is about. That to me is scale. At that point, we can get started. We can actually start to build real things. But until we are ready with a system that can accommodate all demand at any day without struggling, without pushing the price of a transaction up tenfold, then it becomes exceptionally difficult to build anything serious. And so scale is really the most important part of the equation here. So Moore's Law. You know, I think Moore's Law has been declared dead more times than Bitcoin, and for a lot longer. And the reality is, since Bitcoin came out, the speed of a computer has increased tenfold. The amount of memory they come with has increased tenfold. The efficiency of computing operations has improved tenfold, and it's only getting better. And so as Moore's Law scales our computer hardware, so the network will scale with Moore's Law. And in fact, beyond Moore's Law, because this will be a focused, specialized infrastructure designed just to handle this type of traffic. And so we can design for-purpose systems. We could talk about that for hours, but we're not going to get into it today. But the next generation node system, which is known as Teranode, is really being designed to manage things in a way that's highly specialized and allowing for multiple diverse use cases to come out. And it's really about managing global demand. And, you know, Satoshi is quoted as saying this back in about 2009. Existing Visa credit card network processes 15 million internet purchases per day worldwide. Well, we know that BSV can already do that. We've done 25 million transactions in a single day. But we're not even close to all global cash transactions, all global credit card transactions, but we can get there. And, you know, I believe it was possible in 2009 to scale far larger than the Visa credit card network. It's possible today to go 10 times further than that. And, you know, that's what we're here to do. So we scale for revenue on the mining side, but we also scale for low fees. Every time we increase the number of transactions through the network, we can drop the price of a transaction and still increase miner revenue. And so this is how we grow, this is how we increase demand. We provide a service that's so cheap that it's impossible not to use it. So most blocks on the BSV network are now picking up transactions at 50 sats per kilobyte. It's possible to do 1 million transactions for about $10. Now that sounds like a crazy number, but I can assure you that's exactly where we're at today. There are contracts operating much cheaper than that, And if you're doing big data, you can definitely cut a deal with miners that will make it even cheaper. So, that's very important to understand, is that it's not just the public market. If you're doing something specific, the miners will talk to you, they will cut you a special deal, they will give you the service that you need. They're here to manage your needs and manage the needs of everyone else who's connecting to the network. And the perils of not scaling really are that every time the demand reaches the capacity of the network, the cost of doing business increases through the roof. And I myself have experienced times where it's cost well over $100 to do a single transaction. And I mean, that's simply not something that we can build on. This kills the value of the network, it kills opportunity, it kills the entrepreneurial spirit. I can't tell you how many people I've spoken to who are just beside themselves with gas fees on some of these networks, where it just becomes impossible to do anything. But we can see in the history of Bitcoin, a lot of times when the price of transacting on the network does shoot through the roof, often coincides with a trading hysteria and a big price pump, and then usually the price of using the network gets so high that people stop using it and they leave and the price crashes. And if you have a system where the capacity of the network can always meet the demand, you will never have this situation because the price remains steady for everybody using the network. And so it comes down to how does that transaction fee get broken down? There's a lot of talk these days about how proof of work is a destructive thing, how it's highly inefficient. But when we look at a transaction fee, I always try to imagine Bitcoin as a fully scaled system where there is no longer any block subsidy, and so the only revenue coming into the network is from these transaction fees, from an aggregation of hundreds of millions or billions of 1/1000th of a cent transaction fees. And then knowing that that is the only revenue coming into the network, we can actually work out, well, how much of that is going to get spent on proof of work to secure the transaction. Well, if you're a miner, you're spending a fair bit of money on new equipment. You're building the network, so your capital expenditure is pretty high, maybe 40%. You're doing R&D, you're looking for new sources of energy, you're looking for new types of computer system that can help you process transactions more efficiently than the other miners in the network. You've got operational costs, you need profit. And so at the end of the day, the amount of money per transaction that you can spend on that proof of work is a very small fraction of that 1/1000th of a cent, maybe 1/10,000th of a cent, or roughly the equivalent amount of electricity needed to run an 11-watt light bulb for about 8 seconds. Now, that is about as efficient as you can get. It's far more efficient than existing legacy credit card systems. It's far more efficient than going to the bank, using an ATM. And that is the level of efficiency that we can all have, and it comes with unbreakable security, and it's something that we can take to the bank. The same proof of work that's being done on transactions from all over the world, hundreds of millions of them, can be applied to your transaction for just this tiny amount of money. So I'm sure some of you have heard about the Blockchain Trilemma. Is this something that, can I see a show of hands who's heard of this? Yes? Oh, good. It's just a made-up thing. It's not actually true. The trilemma says that you can't have all three of these things because you can't have scalability and security with decentralization. But the reality is that you can't have security without economics, and you can't have economics without scalability. And so if you can't have scalability and security, you're never going to have decentralization anyway, because you're not going to have a system that can endure. The reality is scalability brings growth and investment into the network. That growth and investment brings revenue for miners. A blockchain is no better than its network. So if that network is not making revenue, steady revenue, revenue that it can depend on, revenue that doesn't change with demand, or revenue that doesn't change the rate at which it comes in based on demand, the blockchain can't grow. There's no money to build. It's important to understand that nodes are miners. At the center of the network, there's a dedicated group of systems, and their only job is to collate, validate, and timestamp every transaction that happens on the network in real time. These are hyper-specialized computers. They're very densely connected to each other, and they run the network for us. Anyone who's running a Raspberry Pi and calling it a node is mistaken. They are not nodes. They are just parasitic systems that are essentially being used to prevent the blockchain from scaling. Now, once you have that hyper-connected core, everything else that you do on the outer edges of the layer is controlled and managed by users. We're now in a situation where you own your own data, so you are responsible for it. But thanks to SPV, we have techniques for allowing that data to be kept with a timestamp, with a link back to the blockchain, so that it can be presented to anybody, anytime in the future, and they can have the certainty of that network security. So, I mean, I could keep talking about this all day, but my timer has run out. Do we have Morgan Coleman? Yes, hi Morgan. So I'd like to introduce Morgan. He's going to speak. Okay. 3 minutes, okay. All right. Be nice to talk for another 3 minutes. That's all right. I guess one thing I haven't covered is the Metanet. And so I guess I can talk for 3 minutes about the Metanet. The Metanet is a protocol invented by a guy who lives in the UK. And it is really something that is going to allow us to start taking all of the data that is housed on servers connected to the internet and writing it onto the public ledger in such a way that anybody accessing that information will be able to know that the information they're being presented with is what was created by the person that owns that data. So in other words, we're going to flip the table on the delivery model for the internet, moving completely away from client-server systems to a system where you essentially pull the data that you need directly off the blockchain. Your device unpacks it and opens it for you, holds it in a cache, and any data that you are reading or writing through that platform will either come from or go on to the public ledger. And so in this system, you no longer need to be connected to some back end at Facebook. You no longer need to be sending them your information. They no longer need to have your data for you to use their service. I think that's a very exciting thing. It's something that we use extensively at ELAS to build the tools and systems that we create. And I think for anybody who's looking at building applications on the BSV blockchain, it's something that you need to be looking at now, because the companies in the space are really learning how to use it. They're starting to really begin to deploy some fairly innovative technologies across it, and it's a way that you can create things that are done in wholly, fundamentally new ways than ever before. And so, keep going? Okay. All right, that's okay. I can keep going. Just trying to think. Questions? Do we have any questions? No questions? Yes, Daniel. So Daniel's asking, is it plausible right now to take data that exists on a server and transfer it to the Metanet? And I would say absolutely, yes it is. So the whole thing with the Metanet is what you're building is a structured ledger on the public blockchain. So if you think of the public blockchain as like a tableau. Essentially, you are painting your own design onto that tableau. And so you're over there painting, he's over there painting, you're creating your own information on the Metanet. And then when people access that information, they're coming from some Metanet access portal and telling them, please give me the information that's in these transactions. And so there might be 100 of those portals that can all access your Metanet ledger. So rather than someone going on the internet and having to navigate to your server and get that information, they navigate to a Metanet endpoint and go, here's the transaction list of the information that I want, and that Metanet endpoint goes and pulls that out and presents it to their device.
Does that mean that into the future we won't have the address not found, data not there? Links broken, basically.
Look, not necessarily. You still have to have an endpoint that's serving the data up to you. If your Metanet protocol is somehow different to what it's expecting, obviously you're going to get something broken there. So, look, it's still got to be done in the right way, but ideally that would minimize that, because now you're not paying to host that data on your own server. You've already written it to the public ledger, so anybody who's accessing it is paying somebody else who's got that in an archive to serve it out to them. And so that's a commercial service. You're now pushing that whole responsibility for serving that data off to other people who specialize in doing just that. So rather than everybody having to do all of that themselves, everybody can now focus on the application, focus on the data, and people who are specialized in serving that information out to people can manage that on your behalf.
So that's on the public chain. How private can you get that?
You can get as private as you need to the point of having, not even the data itself on the blockchain, just a hash of the data. You can obviously obfuscate where the keys come from. There's a lot that you can do. Sorry, I saw a question up the back. Hi.
So we're talking about blockchain, and then you talk about BSV.
Uh-huh.
What are the differences from the Bitcoin blockchain, to the BSV blockchain? Because you talk about scalability, but most of us know that the blockchain, Bitcoin blockchain, is very slow. It takes about 10 minutes, for a block to be
Yeah.
verified. I mean, we wouldn't want to have a bank card that's Bitcoin blockchain, because we go to a petrol station and we'll be forever waiting for the transaction.
Yeah. So that's...
So what's the differences from Bitcoin blockchain to the
Bit-
Bitcoin SV division? Is that right?
Yes.
Yeah. This is the only blockchain we're
Sure.
talking about today, right?
Yep. So what I would say is firstly that the BSV blockchain is the Bitcoin blockchain. BTC, which is what is called Bitcoin, is not really Bitcoin. They've actually made so many changes to the underlying protocol and the rules that they use that it doesn't resemble the white paper anymore. So we say that this is Bitcoin. There is a bit of a misconception that you need to wait for the miners to timestamp your transaction. That's not really true. If you're doing business peer-to-peer, end-to-end, like was described in the white paper, peer-to-peer electronic cash, what essentially happens is that as soon as the transaction is made, it can be broadcast to the network and you can know straight away whether or not it's been accepted. And you would have like a service level agreement where you would know that if a miner has responded with a particular type of message, that transaction is definitely going to be mined into the next blockchain. And so you don't need to wait at that point, because you know that they've already done the work of validating your transaction. They've already put it into their block template and they're already spending money doing proof of work on your transaction. And so at that point, they're not going to go in and pull it out and change it. So it's really... Well, that's BTC. That's because they've so broken the system that if I don't pay a high enough fee, I don't know when my transaction will get mined, and potentially it will never get mined. And so that's a problem that they've created by limiting the size of the blocks. And so on the BSV network, where there's no limit on the size of a block, It doesn't matter how many transactions pour into the network, they all get timestamped in the next block. Yeah. Okay. Last question. Oh, okay. Sure. Well, that would just be the transaction itself taking place. So when I go in and I tap, that's the transaction. I'm presenting the transaction to you. It's got some signed Satoshis that or whatever it is, tokens. It's confirmed, yes, zero confirmation. So essentially, as soon as you've got the response from the network that the transaction's valid, that's it. You don't need to wait for anything else. Yeah. All right. Morgan from Lament talking about making it easy for creators to earn using the BSV blockchain.
Thanks, guys. Thanks for having me. So this is Katie. Katie is a devoted mother, a loving wife, a very talented makeup artist, a very hard-working content creator. And Katie actually happens to be my wife, who is currently in labour. I recommend going to the birthing classes because it gives you time you can estimate how long you've got to come do a presentation. So, but being Katie's husband has given me a front row seat to her evolution from a budding makeup artist with a few hundred Instagram followers to one of Australia's most in-demand makeup artists and a sought-after content creator. Now, as glamorous as this photo is, it doesn't show you the lengths that she's gone to accomplish this. I've watched her work herself to the point of exhaustion time and time again, trying to escape this. It's the creator hamster wheel. It's the never-ending cycle of creating and curating content, posting 2, 3, sometimes more times a day, giving brands free exposure in the hopes of getting more followers, and then spending hours replying to and engaging with her followers just to remain relevant. And for what? Less than 1% of all social media posts are monetized. So what's a creator like Katie hoping to get out of this endless cycle of unpaid work? Well, she's hoping that eventually she'll get enough followers that she can charge for sponsored posts or advertising, or that she'll be able to convert a tiny fraction of those followers to purchase a new product or service that she's selling. But what's the likelihood of that actually happening? Of the 50 million content creators around the world, take a guess at how many earn enough to get off the hamster wheel. Is it 5%? 10%? 0.1%? I heard someone say 1%? You're right. It's 1%. 1% of all content creators earn enough to make it, from their following, to make it their full-time living. Can you imagine only 1% of the employees at your office getting paid? Or a retailer only charging for 1% of the goods that they sell? It's crazy. But that's the reality of the creator economy without Bitcoin. So for a creator like Katie, it's actually just too hard for her to earn from her content. And you'd be forgiven for thinking that the remaining 49,500,000 creators just aren't bringing enough value to the market to be adequately compensated. But you'd be wrong. In 2021, the creator economy was worth $104 billion. And that's expected to grow by 20% by the year 2030. The truth is, these creators are bringing massive value to the market and to their followers. They're just relying on outdated and limited monetization methods. The vast majority of creators' revenue comes from advertising. The problem with that is that it's unpredictable, it's unreliable, And the large tech platforms earn far more from the content than the creators themselves. And because it is so hard for creators to earn from their content, and Katie and I do share a bank account, this really does bother me. But what if it didn't have to be like this? What if there was a platform that democratized the creator economy, that wrested control back from the big tech platforms and placed it directly in the hands of the creators themselves? What if there was a platform that allowed creators to unlock their earning potential and take the content that they're currently giving away for free and turn it into a revenue-generating asset? Introducing Lament, a standalone platform for creators that allows them to earn through micropayments for all types of content. Lament is bringing peer-to-peer and, importantly, instant payments to the creator economy. Our creators simply post, earn, and spend. There's no long pay cycles, there's no confusing tokens or exchanges, just real cash instantly. With Lament, creators can easily drive their existing follower base to our platform by embedding links into posts, stories, or their social profiles. They're then able to monetize even the simplest of content through micropayments for viewing and interacting with their posts. With current social media platforms, creators have one revenue stream, it's advertising. When Lament launches, which we will very soon, creators will have 6 revenue streams per piece of content. And because we've built this on the BSV blockchain, the possibilities for us to add additional revenue streams is literally endless. So much so that in the next 12 months, we'll take the revenue streams per piece of content from 6 to 9, and we've got a further exciting pipeline of further enhancements to follow. What that means is that Lament isn't just going to compete for a slice of the $104 billion market. It means that we're able to grow that market in a way that has never been done before. By removing the reliance on advertising and allowing creators to earn through micropayments, Lament will be a catalyst for bigger growth than the anticipated 20% by 2030. Now I know what you're thinking. You're thinking, well, isn't there already pay-to-view platforms, and how are you guys going to compete with them? And I'm glad you asked, because I think in this instance you'll actually see that the most apt question is not how are we going to compete with them, but how are they going to compete with us? So existing pay-to-view platforms are all built on the existing financial system, which means that their ability to add additional revenue streams is seriously limited, but also means that they have to rely on these. The dreaded subscription paywall. Now, we've all rolled our eyes or shook our head when one of these have popped up, haven't we? Of course we have. It's no secret that users are becoming increasingly subscription adverse. But what does this mean for the creator? Well, it means increased and unnecessary friction to convert a follower into a paid customer. It means limited monetization opportunities, and most importantly, it means a drastically reduced income. But it's not just them that suffer with these. We suffer too, as users, because we can't pick and choose the content that we wish to engage with without having to take on an unnecessary amount of expensive and reoccurring subscriptions. Well, Lament removes the need for those, and in the process solves both user problems. Now, I'm sure you've seen one of these, standard bell curve, and it may seem a little out of place, but I assure you it does have a place here. So the current pay-to-view platforms, they brag about allowing a creator to convert 1% to 5% of their followers into a paid subscriber. Now, conveniently, they leave out of their marketing the churn that creator is going to experience, but my point is that they brag about this. Now I'm going to show you the power of Lament. Our beta data shows that some creators are converting 20% of their followers to purchase per post. And that is literally just the beginning. We are just scraping the surface of what is possible with BSV on the Lament platform. Now I'm going to ask you to participate in an exercise. Don't worry, you don't need to stand up or raise your hand or speak publicly. I just want you to put yourself in the shoes of Katie. And I don't mean to be thinking about what it's like to be married to me, because that, I can assure you, is fantastic. I just want you to think about what it would be like for Katie, the creator. And I want you to decide for yourself which platform you would prefer to use, platform 1 or 2. So on platform 1, it allows you to sell a piece of content for $1. And on platform 2, it allows you to sell a piece of content for $1. Which would you prefer? Right? It's the same, either. Now I'm going to tell you that on platform 1, you're not earning $1, you're earning $1 worth of their tokens. And on platform 2, you're earning $1 of cash. Now, which would you prefer? Lastly, I'm going to tell you one more thing. On platform 1, you're earning $1 worth of their tokens that you can't exchange for cash for 30 days. And on platform 2, you're earning $1 of cash instantly. Now, which would you prefer? It's 2, right? Obviously. This is why Lament will win. Because BSV allows us to solve the creator problem in a way that our competitors simply can't. Lament is revolutionizing the creator economy. And in the process, we're making it easy for the use of BSV seamless through this. It's your debit card. This little piece of plastic that every single one of you has is what allows our creators to spend their earnings the moment a transaction occurs. There's no long pay cycles or bank delays or tokens or exchanges. Our creators simply post, earn, and then spend freely in the real world their BSV using their debit card. We've made the user experience so seamless that our users don't even actually need to know that they're earning and spending in BSV. We support the top 15 fiat currencies around the world. And if you'd like to jump on board, we have a wait list for our next group of users. So head to lament.io and join the wait list. I also will stand up here for a few more minutes because I won't be around for question time. I will be going to the birth of my son. Also, if you'd like to email me, because we are currently raising capital, you can head to just email me at morgan@lament.io. But if there's any questions, please feel free.
Yeah, I just have a question about, do I need BSV to upload cash to your Lament service?
No, and that's a great question. So part of the user experience when you're first signing up is that you create a wallet, and it's a one-click wallet, right? So when you first go to use Lament to purchase or to view content, you ask for email, a username, and then you upload fiat currency using your credit or debit card, and that in itself will actually create you a wallet within Lament. You then spend whatever, and when you want, you withdraw it, it goes straight back onto your debit card as fiat currency, which allows you to then spend off wherever you like.
Great presentation, Morgan.
Thank you.
Yeah, just to go a little bit deeper on that one there. So for every engagement, say for every post or content that I upload, is there a cost there in fiat? And is that cents, dollars, videos, or anything like that? Or it's only on the earning potential side where you can actually monetize and whatnot? So I think like with Twitch and things like that, you're having to pay to play.
Nope. So if you're a creator and you post, that's free. The only moment you get charged by us is when somebody purchases to view your content or interact with your content, and we take a service fee out of that.
Perfect. That sounds amazing. Thank you.
My question is, where do you store your content for your platform? Is it on the blockchain or is it external to the blockchain?
This is a good question. So we store, and I'm not the technical founder, I should point that out, but we store our hashes on the blockchain, and then we use AWS for the other side of stuff.
So how does the client, so the client has verification logic?
Yes.
And do you know what sort of technology is for that? Merkle proof or something? Is it?
That's a good question, and that's a question for my CTO. So I should point out, guys, I am very much the CEO and more the commercial side of the business rather than the technical side.
Thanks.
All right. Thank you very much, guys.
Thanks very much. And just on what Morgan was saying there, you know, the one thing that I love about BSV is that it is possible to create entirely new business models. I'm really waiting to see the first application who is taking 1 million unique payments a day of less than 1 cent. That's $10,000 a day business straight away. And it's possible now. And the amount that you pay in transaction fees is so tiny, it's totally cost effective to do. So that's a very important and exciting aspect. But now we're going to hear from James Belding about Tokenized. And Tokenized is a fantastic product. It's developed right here in Queensland. And I'm tremendously excited about some of the things that are coming out. And yeah, thank you very much, James.
Am I just doing the arrows on the keyboard? Sorry? Do I just use the arrows on the keyboard? Yeah. Cool. Good morning. So as Brendan introduced me, I'm the CEO of Tokenized, and we've been in this journey, or BSV's journey, since the beginning now. So it's been a long, hard battle, but times are very exciting at the moment. So we've got some exciting things to share today, but I really want to talk today about smart contracts and really sort of frame what they mean and get the terminology correct. And then more importantly, look at the value proposition. So I would sort of controversially say or start off that pretty much everyone in the industry we think has got it wrong. And the way they call contracts today, contracts are just not contracts at all. So for example, Ethereum, they call fundamentally at their protocol contracts. Even Vitalik himself years later, I think it's about 3 years ago, admitted that they're actually not contracts, and it was really poorly named. So today what we've done is we take the same kind of components, the machine-readable, machine-enforceable code that you see on distributed ledgers, and we take that standardization, that codification, but we build that as a very tiny piece to the overall puzzle, which is a contract, which is lawful, precise, judges can read it, interpret it, lawyers can make sense of it, normal people can use it, and there's a great deal of value to be derived from it. So the key sub-theme here is improving financial markets through a digital transformation of contracts. So that's the heart of it. And I think tokens get a lot of undeserved credit for being transformative. I think tokens are exciting, but they're a very, very small piece of the puzzle. And when you compare tokens on DLT to existing traditional financial technology or infrastructure, it's not that big of a jump, right? There are some properties that are better, but we think it's very small in terms of, it's not a 10x jump. But when you bring contracts into it, and you bring a digital transformation of contracts, this is what we're talking about, 10% or a 10x jump. All right, so just to kind of frame the problem a little bit better, so there's a trend that's been very apparent over the last 10, 15 years, and that's a move away from public markets. So companies are IPOing less often and staying in the private markets longer, and in many cases, they're remaining private for longer. And there's a number of reasons for that, which I won't get into, but the burdens in the public markets are high, the costs are high, and the benefits to delivering and executing on businesses is actually quite high as well. So this is a trend, but even more importantly is that private capital markets are much, much bigger than public markets. So not only is the trend growing, but it just starts off much bigger. And when I say private capital markets, I mean startups, I mean private equity, I mean private debt, I'm talking about municipal bonds, I'm talking about bank accounts and instruments that banks issue, and many, many other things too, even carbon credits, things like that. So the problem in the private capital markets is that there's a low level of digitization. It's or poorly digitized in the way of describing it. So if you think about your typical transaction or your contracting process in these private capital markets, it's paper-based, and it may be Adobe PDF, it may be DocuSign involved in the signature processes, but the actual document itself isn't interpretable by computers. So it's very, very human readable only, and this usually requires specialized lawyers and the like to kind of process it. And it's just a big pain to kind of process it and figure out what you're actually dealing with and what the risks are. So this is where that digital transformation of contracts comes in. So ultimately, this poor digitization leads to inefficiencies around the capital formation. So that's really just forming capital, taking investment, putting it to use. Asset services. So asset services are if you're an investor and you're an equity holder or you've lent money, you got to get paid a return. So you get dividends, you get distributions, you get coupon payments. So the asset servicing is really about delivering that return, so the actual mechanics of it. And then also in addition to that is dealing with sort of the terms and conditions or your rights. So if there's a change to the company's business plan or if there's certain changes to the actual structure of how it's owned, you got to vote on it. And there's elements around that. And then the secondary market is all about trading those interests. So going to the public markets, trading with someone else, they pay you money, hopefully at a return, so you made some money. But it's a critical part to the functioning system, and it really reduces the overall investment risk if you can sell it. So our smart contracting platform utilizes blockchain. So that's the fundamental layer. Every single part of the contract is stored on chain. So it's not just a token, it's not just a little bit of code, this is everything, all the terms and conditions. A good chunk of it, based on what we've done in our protocol, is machine readable and is machine enforceable. That's a really critical part. That's where the automation comes into it. That's a really revolutionary part. But there's also parts in contracts you just cannot make machines make sense of. So an obvious example is like a non-disclosure agreement or a confidentiality clause. Many contracts have this. It's a really important part of business. But how does a computer know what someone has said in the real world at a private party, right? Like it just doesn't happen. So you still need it there, and there's benefits to having it in a structured digital format that allows the people that are interacting with these contracts to recognize these rights and remind them of it and manage those risks. But you can't really have any code sort of act on it. The key part here, I think, is what really makes this viable is the BSV's properties, the things that we think are unique to BSV. So this is extremely, extremely performant, really, really, really low cost, and scalable. So you can get every single commercial record across every single deal in the world, all on it, and you can do it for extremely, extremely cheap. So when you're putting a contract on and you're amending it or you're performing certain functions, we're talking less than $1. We're talking really 5 cents, hundredths of a cent, these types of costs. And again, if you go to any other network or really any of the networks that are popular at the moment for this kind of thing, you're spending hundreds of dollars, thousands of dollars in some cases, and it just becomes unfeasible. So this is kind of a way of thinking about our architecture and what a smart contract is, and even thinking about it a little bit more broadly. So we see smart contracts as the buzzword, the key part, the anchor of this whole revolution or digital transformation, but there's a lot more little pieces involved to make this really compelling. So this is where I actually like to use the term commercial records and bringing all the participants that kind of go into regulating, enforcing, administering the contracts. So you can see here we've got some technical concepts like identity oracles, authority oracles, event oracles, but really what they represent is a technical service, an interface for regulators or regulated entities, for example, to perform their functions. So in the case of an identity oracle or authority oracle, you're basically permitting within the smart contract that these services can perform functions like freezing a token, confiscating a token, or unfreezing a token. Those are the core pieces for an authority oracle. And that might sound offensive to some people that have certain ideologies or a certain ethos in this space, but we would suggest that it is critical, absolutely critical for property rights to be enforced. So for example, the most obvious example would be a court order, right? So if someone has, if there's a dispute and a court has decided that some person gets the tokens and the person is unable, maybe they lost the keys or maybe they just refusing to comply, you need some mechanism, some way for authorities to take control and correct the ledger so that it reflects reality. If you don't have that, what you have is a ledger, a source of truth that doesn't reflect reality. So you have this ledger that doesn't mean much, and you have to have side chains or separate databases that other people control that kind of correct the inconsistencies on chain, and then you've kind of defeated the whole purpose of having a distributed ledger. So it's really critical. And also by doing the structure and bringing these people into the fold, you can increase automation, and you can increase transparency, and you increase accountability. So if you have, for example, a regulator, for example, who is acting not in good faith or not according to the rules, it will be obvious to everyone that they've broken what they should be doing. They're not acting in good faith because they can see the full records of their actions and the justifications behind it. So it's really creating a much more transparent system that brings everyone into that scope. Over on the left-hand side or right-hand side, you see the smart contract agent. So this is the core logic. This is the software agent that's performing the functions related to administering the contract. A way of thinking about this is really a software version of a lawyer or a transfer agent or some type of professional like a secretary, company secretary, where they're actually managing the registers, managing the contracts, taking requests through email in a traditional sense, and then if they're allowed to do it, they'll go and make changes to the contract. You can automate a lot of that, and that's what that smart contract agent does. But there's still parts where you need an actual representative from the company to make changes that kind of represent the interests and wishes of the company as well. So that's where the contract administrators come in. So this might be like a director or an executive, some kind of individual senior, and they'll make changes directly on chain, so they'll amend the contract. And again, this is just how business goes. These are real concerns, these are real needs. And by doing this architecture, again, you're bringing everyone into the fold. Everyone has a standardized way of interacting with it that everyone can interpret. They don't have to look at non-standardized contracts that have totally different terminology, totally different structures, and things that are quite confusing and conflicting. So this brings a lot of clarity to the whole process. And then, of course, you have token holders. So token holders are really, as we all know, people that are holding tokens in their digital wallets. And I think the better way to think about this is really instruments. So financial instruments, shares, bonds, coupons, things that represent some rights or duties in the contract. And those are things of value. So that's what you really want, is the right to be paid a dividend. That's why you care about holding a token. And so that's what that's all about. But it connects it up to the contract itself. So everyone has the things that are most meaningful to them all recorded and standardized in a way that's much more efficient to kind of understand. So this is kind of taking a broad view of sort of the mechanics and the architecture of what we've done here. So the example here is a municipal bond. So a municipality issuing, let's say, some debt to build a bridge or to improve some kind of element in their municipality. So you've got the actual smart contract itself, specifies all the terms and conditions and who's involved and what kind of control features are available. Then you got the tokenized asset itself, so that's the instrument, tokens, and then you have the investors that hold on to that. And the arrows are all about control, so who, which entity, what kind of control they have. In the case of the investors, it's using non-custodial private keys, just like any Bitcoin or any kind of distributed ledger approach. And then down at the bottom here, this is where the more, all the different specialized functions come into play. So this is the contract administrators I talked about before, the identity oracles, authority oracles, and showing the kind of flexibility that they have in terms of the authorization schemes. So how do they interact with this contract? What are the control measures? Is it distributed in a sense? Like, do you have 3 of 5 directors needing to sign off on important actions? And so ours is able to do anything, basically. But the key part there is it's ultra, ultra secure and very, very flexible. And just on this too, I think the non-custodial approach. So if you look at Coinbase is a good example. So they're a custodial wallet. There's a lot of problems that approach, and we think this non-custodial approach can really, really be pushed in a way where you get the user experience to be on par with any traditional fintech today. So it's easy to onboard, it's secure. It can be done in a way that if you lose your keys, you don't actually lose your coins. That's a really important piece, and that's part of our protocol and part of our approach. And then in addition to that, we think it's a better security architecture. It's an upgrade to existing tech today, traditional financial systems. So this is what we see this as being the default approach that every bank, every enterprise kind of solution will take in the future, and it's a really big step forward once you appreciate the details. So in terms of value proposition, so this is going back to like, why are we doing this? Why are we getting smart contracts into the fold here? And really it's about improving the overall user experience. So better, faster, simpler. That's the whole point of software in general. So what we can do and what we're trying to do here is bringing all these tools that currently exist today, so Word, Excel, DocuSign, Adobe, Carta, all these kind of email even and Drive, and consolidating them to a single platform where every piece of data has a single source of truth. So if that piece of data gets updated or changed, everything that depends on that piece of data will then be updated in perfect real time. So this is a really big step forward. In this world, this current world here, when you look at all those tools, you have to manually adjust everything, right? So if there's a change to the contract, if someone issues new shares, then you have to have someone manually going through that, recognizing those details in the contract, and then updating the spreadsheets, which might be 3 or 4, cap tables, registers, and the like. And they might have to update by email, by sending out new instruments, new share certificates, and the like. And then you might have to update Carta and other tools like that. So you have probably 5, 6, 7 sources of truth that you can consolidate to one. And what you get then from that is automation. So when one change happens and it's authorized by the contracting parties, everything gets automatically done perfectly. So you can get a whole new breakthrough in terms of cap table management. Everything can be automated. Whereas today it's still very, very manual. You can have something that you don't have to do, you don't have to manage these registers at all. So big, big step forward. So this is our app, and the reason why I brought this in here is I really want to give you a sense of what the user experience is like, and kind of show you where this information is brought together and how the experience is going to look. So if you've started a business, I'm sure a lot of these concepts are going to be very obvious to you. You've probably dealt with them in various capacities. But this example here is really showing what it looks like from an issuer. So if you're issuing a company, if you're issuing debt or you're issuing equity instruments, you've got to kind of keep track of all the holders, what their positions are, what you owe on them, when your next interest payment is due, how much has already been paid to date, if there's any late payments, if there's any disputes. All of that is now on-chain, single source of truth, and this is what you the dashboard that you can present. Now, in the private capital markets today, you cannot get this experience at all. It's all basically in people's heads and based on contracts that are disparate. There may be 10, 15 contracts involved in this that you have to go through, open up, read, process, memorize, and kind of keep track yourself. And everyone has to do that as well. So this is a big, big step forward in digitization. So what does a smart contract look like? What are we talking about here? So you'll notice this is our visual representation. This is our user interface for it. It's taking the terms and conditions, codifying where we can. So what does codifying mean? Codifying means standardizing, essentially, using a symbol to represent something bigger, a bigger concept that makes it more digestible. So you can start to standardize around it. You can process things automatically. So an obvious example, if you look at the top header there, so this is a section that's common to all contracts, governing law, jurisdiction, right? So if you look at any contract today, they'll always have the choice of law, governing law in there, but it'll always be in a non-standardized form. So you're talking like a full sentence or two in legal prose that every lawyer has a different style, a different use of terminology, different phrasing, but essentially all means the same thing. And so what you can do is by creating a standardized protocol that effectively forms a master agreement, you can have just the laws of state of Delaware, and when you go to the protocol, it gives you the full legal prose that lawyers can then digest if they need to go to that level of precision. But for everyone else, it saves them the time of reading it. It saves them the time of that complexity of interpreting it, making sure there's no tricky language in there. And so that starts to apply to more than just those basic concepts. There's actually a lot more that you can do. And so when you move down into the instrument section, so these are your tokens, the ownership rights, if you will. In this case, this is an unsecured note, debt security. So you can start interest payments, payment schedule, collateral, transferability. These things become very easy to understand, and they become across all these different investments. You can right away recognize what that means and what the impact is to you, an investor. And so again, all the legal precision is at the protocol level. So you don't lose anything by going this route. You just gain in terms of simplicity. So it's a big important point. I'll move on in a second. I'll share more about the ones below, but I think the real key thing here too is the automation that comes from it. So when you get these codified terms, particularly around the instruments that vary by instrument type, this is where software can pull out the details and can give you novel and real-time insights. So for example, if you've got, today this is the experience that people go in the private capital markets. If you've lent someone some money, you pretty much have to send an email to your lawyer to ask them when the next coupon payment is due, and you need to compare that to bank records. So it's a manual process. You have to keep track of it yourself, maybe do a spreadsheet. With this, everyone knows exactly when the coupon payment's due, if it's been paid before, if it's late, by how much has been late, and therefore you can get all these real-time insights, these real-time notifications, and what that can do is start to push the complexity of contracts. So because it's so easy and so cheap to actually engage in complexity, really complex contracts, mini contracts, one person can manage a lot more and do it a lot cheaper. So this is a big step forward. So moving down into the different sections of a smart contract, so this is what rounds out and gives all of its precision, is variables and defined terms. So these are just what you expect in a real contract to get dictionary defined terms. Those are critical because on a per contract basis, they might have a very specific meaning, very specific nuance. And so what we do here is we just standardize into the structure of it so that everyone can interpret it very, very quickly. And then we link those terms, if it's a variable, it's very similar to defined terms, but it has a type against it. If it's a defined term, it's just an English word. But we actually link it in the body of agreement. So the body of agreement is where the legal prose is. This is where the human readable components are, but you're embedding those defined terms and those variables in there, and therefore you can start to templatize things more easily. You can start to structure and repeat the contracting processes in a way that's much more predictable. So and I'll just say on the variables, that's really about like a type that you want to embed and you want to define explicitly, but it's something that machine readable, machine enforceable. So you have like a party or a price or an event that oracles can specify. So that's where you lay those out. And I've actually missed one on the top here. So oracles, that's what I was talking about before, is the identity oracles and authority oracles. So the way that we design this is the issuer of this contract can specify who the oracles are for their contract. And so they can say, I've got a broker-dealer that we're working with or a transfer agent. You can just literally specify them there. And then everyone that becomes a counterparty to that contract knows from the outset who that party is and what influence they can have and what rights they have to kind of exercise their authority. So again, structuring it, standardizing it, making it much more transparent, bringing all the information into a much more accessible user interface. So the tokens part, so the thing that I've de-emphasized as in importance is still very important, but this is what a treasury might look like with tokenized instruments. So rather than thinking in terms of just holdings and seeing the number go up, we're looking at the full breadth of all the instruments that are important. So you can see here I've got assets, liabilities, equity. So those are the three sort of components on the balance sheet, and that's what these instruments essentially form to any entity that's either issued them or holds them. And so this case here, we're looking at LP interests, so limited partnerships, a common structure for funds. And so these are really equity instruments that have been issued by this particular entity, but for another entity who's holding those, it would form an asset. So this is kind of just really a live balance sheet, if you will, with tokenized instruments at the base level. And this is the foundation of triple entry accounting beyond just the means of payment. So beyond cash, this is bringing all of the instruments into the fold. So peer-to-peer trades, atomic swaps, a term a lot of people have probably heard. Our protocol can do this. Everything's fully on chain. So we're talking about not only the negotiation and the execution part on chain, but also the clearing and settlement. And to speak to some of the question earlier about the performance of this, we operate on the basis of 2-second clearing and settlement. So this is us broadcasting to the blockchain network. Our platform will sample all the nodes. And if we get a confirmation from all the nodes that they did validate the transaction or the transaction and they've accepted into their mempool, when we do both a reasoning out of the risks, so we had a whole paper done on the motivations, the practicalities of operating a node, the likelihood of it being accepted from a rational perspective, and then we also tested that hypothesis and that reasoning against the empirical data. And essentially, we can get to 99.9999999% reliability at any value for if certain conditions are met where you get that acceptance from all the miners and you've tested and looked for double spends. So if you see no double spend attempts within 2 seconds, that holds true, those numbers. So these are very, very compelling, very robust numbers. We're talking better than traditional financial systems today. So it's really, really important to note. So again, this is a big step forward, and that's near real time. So you basically can operate even at a real-time gross settlement basis, so all the way down to like the core infrastructure of banking with very, very small payments, micropayments, all the way up to any type of transaction with any type of security at exchange level, ATSs, all the like. Everything operates on the same basis, an incredible performance, with incredible granularity within 2 seconds, and that's on a global basis. So this is, again, a real big step forward. In addition to that, what's unique about the way that we've approached this is that you can do a lot more than just one instrument for another. You could do potentially 50 instruments involved in a trade, and you could do it with 50 counterparties, and they could be going in any direction. So you can get very complicated trades. Now, there's some unique, novel use cases that make that compelling, but I suggest most are going to be just basic party trades. But there are some use cases as well. And so here, just again, rooting this in real financial terms. US dollars, so these are on-chain currency tokens. And you can see below there we have an instrument or asset pay mail address. So this is what we think is the new way of addressing instruments. It's sort of different to what most people think, which is a ticker symbol. Today, most people say, well, you know, if you got an instrument you want to trade, you have to look for a ticker symbol, and that's how you identify it. We think that's not practical when you go beyond the public markets. Private markets are much more complex. There's way more instruments, and we think this is the right way to do it. So when you can see the US dollars, you have what they call the asset alias, if you will, and on the right there, that's the actual issuer. So you got domain-based issuance control and association and all the security elements that come with that. So you can essentially look up Amazon.com, what instruments they have, and you'll see all the shares, different preferences, and things like that. So that's a way of identifying, discovering it, and addressing it. Yep, nothing more to say on that. So just to kind of really speak again to the value that starts to become apparent when you build on this foundation, you can start to look at all of the commercial activity between these entities over time. And again, triple entry accounting, everything is a single source of truth on chain, but you get really complex type commercial events. So when you go to a bank account today, you have a credit and debit and not much more, right? That's all you can really see. And sometimes you can embed in the memo or in some of the descriptions extra data, but it's non-standardized. It doesn't cross between entities. That would be a very bespoke kind of solution that they would sort of dictate with their payments and receipts. In this case, and with our protocol, you start to get into things like issuance events, redemption events, distribution events. So these are events that are codified that everyone can make sense of, and therefore all the software associated with it can then instantly recognize and do the books automatically, update the registers automatically, and again, this is a huge step forward in terms of automation. And this is kind of really just showing you a visual UI of what it might look like to be an authority oracle, freezing or confiscating assets, and what the holder or the issuer might see as well. So an example too here, so we've got municipal bonds, Chicago Midway Airport, the top there on the left, 25 bonds. So the Department of Justice, and that's their pay mail handle, has essentially freeze order targeted the instrument. So those 25 have been frozen. So this might be, at the bottom you can see the memo, compelled by court order, and they give a reference to the court order. So this is what we might see in 5 years' time, the entire system operating on chain. And this is kind of the framework that you'll see. So pretty clean, pretty sensible, and again, much more accountable. So support for novel and complex use cases. So quite often in securitization, even if you tokenize it, you've got a complex set of legal structures, like legal entities that kind of wrap up different things and accomplish different goals. And there's governance elements to it as well. But you end up with just tokenizing the final instrument of the top level entity. So in this case, on the far side here, it might be a unit trust that wraps up a few entities below it that holds the instruments or hold the assets that you're interested in trading. And you would just tokenize that final piece, but there's a huge amount of complexity underlying it, and that complexity can be very significant in terms of financial risk. And even, I mean, there's examples in history, 2008 mortgage crisis, a lot of the CDOs and complex derivatives, they're very, very complicated, and people just didn't have any transparency as to what was going on underneath it. What we can do is we can do smart contracts across everything, and so they're all interacting and all transparent, all standardized, so that if someone does want to go in and poke and look for these details, they can do so very, very easily in a way that's standardized. It's not a 500-page document that is completely different to every other document they looked at, and it's going to take weeks and weeks to process. We can start to have software tease out what's standard and pick the things that are unique and bespoke and just present those things to you so you can assess the risks. So this has really, really profound implications, I think, on stability of the financial markets when you start to bring in all those derivative contracts and things into the fold, and so that they're all on chain, in the public domain, fully transparent, interactive and composable. So that's all I have to say today. Appreciate your time.
Okay. We were meant to be having a talk from Dr. Cynthia Kai from Macquarie University, but it looks like she was unable to make it to Brisbane. She was going to give us a pre-recorded presentation on triple entry accounting, but we haven't received that yet. So what we might do is have some Q&A for James, if that's all right, James. And while he's coming up, I might just mention James is also part of the Technical Standards Committee for BSV, and in the last, 2 days, they've published the final standard for Paymail. And Paymail is pretty much accepted by almost every, or used by every wallet and application on BSV. I know that we make extensive use of it at ELAS, and I think a tremendously important standard. So that's what, when you saw in James's presentation, when everyone is being referred to as an email address, that is literally what is replacing the Bitcoin address in BSV apps. And the use of Paymail is really important because it allows you to move away from the pay to public key hash as a template and effectively use any kind of script that you like. Yeah. But anyway, if there are any questions for James, do you want to, James, why don't you come up?
Great to see you, James, and great presentation. Question in regards to the treasury there, because I know like a majority of people, when they hear like this level of transparency, there is a bit of fear there, and they go, oh shit, like Big Brother's kind of being able to see every move and everything we do in the whole direction there. When it comes to an entity with the treasury there or your wallets, do you have the ability to have brand new addresses within that? For every time there's a transaction, that way you're not always using the same address. So that way from the outside in, if someone's to know that that's your address, they can't see everything else that you've got going on. Is there that kind of, I guess, proxy there to be able to have an element of operating in the private?
Yeah, absolutely. It's a great question. A question we get all the time from our customers. So what we have, and this is, I think a lot of the good wallets will do this as well. So it's not unique to us. We're not pioneering it. But essentially, it's the concept of never reusing address. So when you're looking at the public ledger, you can't really make sense of who owns what, who's transferring what. And we employ a lot of algorithms that kind of obfuscate even further. So we randomize the values that are being sent, and we spread them across different output values and even different transactions, depending on the sensitivity and the kind of the use case itself. But what you get to is practically no one can make sense of what's going on. Like you can't tell the difference between someone reorganizing their own wallet and just shifting things around back to themselves, or paying someone else, or paying 10 different people. You just cannot tell. And there's a lot of math and sort of theory behind this, but you can get to a level that's just as private as traditional infrastructure today. So there's really no concerns at all.
Yeah, that's really cool. When you look at that there, obviously that's extremely beneficial to big business and whatnot. For the average Joe, having something like this as their back end for their banking, tax, accounting, and all the rest of it looks like it's absolutely amazing. How far would that be away from having, average person being able to utilize something like this as their wallet and account records for their back end?
So how far away is a tough one to say, but we're sort of at a it's all good. So it's kind of tough to say exactly when this will happen, but we've sort of got all the pieces in place now to make it compelling for everyone involved. So this is not about the banks needing to fear this tech coming. It's not about investors or holders or one of them not getting a benefit out of this. So it's really a compelling value proposition for everyone involved. And so you can take even the likes of bank accounts today, which are really, it's a form of debt, right? It's a demand deposit you're loaning to the bank, and they're keeping a record of that loan and paying you interest in return for it and using it as working capital. You can turn that into a tokenized instrument, right? So tokenized bank account, tokenized demand deposit. So you're bringing that on chain. You're still getting interest. The banks still get to control a lot of the money and use it in the economy in terms of investing and management of that working capital. But you get the benefits of being able to have these instruments interact with smart contracts and other instruments and sort of everything that I showed you there, better reporting, better insights. And so we're actually talking to a lot of banks, like real big players, and they're starting to become very interested, obviously very slow to move, but the path forward for them is not too different for, say, like a fund coming on, being an issuer, logging in, specifying the instruments they want to, like the LP interest, let's say, or the equity instruments, and just issuing. The same process, the same steps apply to a bank as well for those types of instruments. And then on the flip side, for customers using it, it's the same experience. So we actually think that at some point, this is going to be the standard that everyone operates on. And so bank accounts will be upgraded, if you will. And we think the buzzword is going to be smart contracts in about 5 years in fintech. So along these lines. So we'll see, but it's coming for sure.
That's cool. Next question.
Thanks for the presentation. I would like to ask one question. In the presentation, you talked about your smart contract is very. The key feature of the smart contract is it's very enforceable, right? So I probably have missed something, but I would like to get further details of how are you going to enforce your smart contract. Do you still rely on the traditional authorities to enforce the smart contract? Say, taking the example you mentioned in the presentation, like releasing a fund to a third party, if the third party refuse to execute the contract, they've committed on chain, how do you enforce the smart contract?
Sure, yeah, great question. So the way that we've architected it is the agent is operated by each issuer, right? So we see this as a natural fault line of incentives, responsibilities, where they naturally have to take responsibility for sort of these records anyways, and that's where the government places on, that's where the national relationship. So the agent operates, the issuer operates an agent, and that's almost like an email address or email service or a mail transfer agent, and they interact with the blockchain on a request-response basis. All the authority oracles, identity oracles I described before is fully configurable and optional, so you don't have to have that. You can operate on a similar basis where nothing can be confiscated, nothing can be frozen. It's up to the contract issuer themselves and obviously the parties that kind of become holders. It's also resistant to jurisdictional risks. So if an agent was managed by a Chinese company or Korean company, you couldn't have the American government interfere. There's no possible way, because the only interactions with that agent and the blockchain is censorship resistant in a sense, right? So it's kind of like allows the whole global world to have their own little private permission chains that are jurisdictionally specific to the issuer themselves, but it doesn't interact with each other, but it interacts on a protocol basis. So where a smart contract wants to interact with another one, like through an atomic swap, the protocol exists and the mechanism exists for them to do it, but you don't give up sovereignty, you don't give up control. So it's a very, very powerful, it kind of takes the best benefits of being distributed, decentralized, and kind of embeds it into the contract, but it gives options to allow, regulated authorities or regulated entities to come in and do their work on a permission basis, but you can even spread that across jurisdictions. So you could have a contract that's fairly global in nature. You have investors from around the world, and you allow a broker-dealer from the US as well as a broker-dealer from Italy, and they have their own sort of Venn diagram of control. So they just deal with their subset of customers, and they have no more additional scope. They can't go beyond just their customers, but they're still able to interact with the others. So I appreciate there's a lot of nuance and details there that it's hard to get into, but does that kind of at least give you a sense of...
Is it the issuer or the miner who is able to do
the issuer? The issuer. Yeah, the issuer. But the issuer controls it. They can delegate that out to the authorities if they want to.
Okay, thanks.
We can chat later if you like, and we go into details.
Yeah, thanks.
Thank you. Yeah, it's a great talk.
Thank you.
My understanding is that you have a smart contract and you also have a corresponding human readable contract, right? So my question is, how do you make them work exactly the same?
So how do they interact, kind of thing, or how do they?
So the smart contract normally are written in like programming language. The other one is like human readable, for example, English. Then how do you make sure these smart contract you're written in programming language implements exactly what is written in the natural language?
Okay, so there's two parts to it. So our contract, so what I prefer to call like the machine, the code itself that's on the blockchain and sort of enforced by the miners, I prefer to call it a script, which is what Satoshi called it. You know, he really thought this through, I think. But then you have, as part of the broader protocol that we have, you also allow for areas where you write the human prose. So it's structured. You kind of say like, this is the human readable part, this is the machine readable part. And so the computer knows what's what. And when it comes to some human readable prose or terms and conditions, you simply cannot convert it to machine readable stuff. It just cannot be done. But you can support it by having it adjacent in the data structures to the machine readable code. And then when it comes to the drafting capabilities of our platform, we enforce those rules. So when the user's drafting their contracts or reviewing them, we prevent them from making mistakes that are contradictory. Right? So you get a clear separation of concerns.
So whose responsibility to, like, I guess it requires expertise to separate which part can be written in in machine readable code and which part can only be written in natural language.
Sure. So it's really done at the UI level. So it's done like, so we guide you as to what is machine readable. You just select, you configure different options. Like we want the payment schedule or the interest rate to be this. We want the governance terms to be this kind of threshold, like 50% of people have to vote in favor it. It's this type of voting system. And then when you get to the body of agreements, you can absolutely make a mistake and kind of override that, absolutely. But the way that we've designed our UI makes it really easy. And then in addition to that, we've got like a template library. So it's gonna be a template library not only that we curate and start to kick off, but anyone can contribute templates of their own. So there's a little bit of expertise that allows to create great templates that, you know, don't trip over themselves, so to speak, and other people can buy them from them on a, you know, a very low cost basis type thing. So there's a few strategies there.
Thank you.
No problem.
Any further questions?
It's a very quick question. Is tokenized hiring now?
We're always looking for really great engineering talent.
So you're mostly looking for engineers?
At the moment, yes. Yeah. But things may change in 6 months. So if you're interested, always, you know, get in contact and develop a relationship. And yeah.
Just behind.
Hi, great presentation. I guess we still can't get away from this authority oracle, right? So just a question about that. When you were outlining this, was it more so to be for the two parties that were dealing with each other, or was it more to satisfy things like government organisations, so perhaps you could be the platform of choice in that? So who were you really trying to satisfy?
So we think that the end user, right, is who's gonna be paying the money, right? So you gotta build a compelling value proposition for them. So that's issuers and the holders. But our argument is that this is actually what they want. They want something that's useful and meaningful and fully on chain and that has the best possible value proposition. Now we looked at this from like a first principles approach and we kind of like delved down into like what are property rights, you know, what are the non-negotiables, you know? And we reasoned out that you absolutely do need some kind of function this way, because if you don't, you end up with a really hacky system that depends on multiple sources of truth. Now my argument is even in this period of, there's a lot of gray in the market, like the legal sort of ramifications and the regulations are not certain yet. So even in this period where there's the Wild West, Coinbase and their ERC20 token, USDC, they have elected to not have essentially a freeze or a confiscation function like we've had. But in practice, the authorities have just made them freeze and do these exact same functions anyways. where they do it with an off-chain database, and they just basically let everyone know, don't trade, this is a blacklisted address, this is a blacklisted, these are now frozen. So they are doing it, in fact, even in this gray period, even on the most decentralized network out there, they're just doing it in a really convoluted way where you have to depend on Coinbase's servers to tell you what's frozen and what's not. So in practice, this is what's happening. Ours is more elegant, where it holds Coinbase, in that case, to account. So you can see what they've frozen, what they haven't frozen, and what the reasoning was behind it. So this is really just, really reasoning from first principles, what really needs to happen to push this forward and make a really compelling value proposition, and then extracting the most value from it with the best approach. So that's...
Okay, thanks for that. And then just an add-on to that, with the authority oracle, does that create like a backlog? Will there be a time where I'm understanding that it's going to be more manual, not like the smart contract is?
So it's very automated, in fact. So we have part of our open source implementations is an authority oracle and identity oracle services, and that can be automated to whatever degree you want. So yeah.
Thank you.
No problem.
Anyone else?
All good. Thanks, guys.
All right. And I think it's very exciting to hear from James. Really, for such a long time, crypto has been all about, hey, we can do whatever we like, and we can pretty much ignore what the rules are, and because we're crypto, and code is law, right? But the reality is that that's not how the world works. And as James was saying with Coinbase, that big hammer is coming down and saying, no, you must do things properly. You must do things in a way such that the people who come and use your platform have recourse when things go wrong. And that is not something that people have been thinking about. But in the BSV ecosystem, it's part of our DNA. It's what we're all about. Everything that we do is designed to have that recourse, to allow regulation, to allow interaction with authorities. So, yeah, anyway, that's it for our morning session. There's some morning tea outside. We'll be back in here in about 20 minutes. So thank you very much, everyone.
1, 2, 1, 2. That's a lectern. Okay, so I need to swap that one across. That one's now lectern, good.
Enterprise Blockchain Conference, sponsored by the Bitcoin.
What's on your mind, Brendo?
In my mind, I would. All right, everyone. Welcome back from the break. Next, we're going to hear from Eli Afram from Anon Survey, but also from AMLA Gold. And I just want to say a bit of a personal message to Eli. Thanks for believing in ELAS with the AMLA platform. It was hugely transformational for us, and we really love that project. And definitely. So thank you, Eli.
Thanks, Brendan. Thanks for having me as a speaker, and thanks to the organisers. I know there's been a big effort over the last couple of weeks to get this all happening, and it's a good turnout too. I recognise among the audience that we have quite a number of academics and a number of students, PhD students too, and lecturers. So I think it's quite relevant that you're here. Certainly, you drive the future of what happens in the world, and this particular application that I'm going to concept that I'm going to talk about, concept and application, is quite pivotal to the future that you are trying to build. So, and that's basically verifiable voting on blockchain. It's a bit of a holy grail of blockchain utility. So I'll get onto it. Imagine you have a transparent ballot boxes. These actually exist in real life. But imagine that you were, and try to visualize this, but try to visualize the entire population of Australia. To make that even easier, imagine the entire population of Australia is only 10 people. And so you imagine you had that 10 people population lined up, putting their vote into a transparent ballot box, as you can see on that screen. Then imagine, after all the votes are cast, and you can visibly see people putting in these votes, then imagine that you could walk up to that box and you have these big plastic gloves that you can reach in without tampering, but you could reach in and you could view the individual votes. You can tally them up yourself. You can verify that they've been done correctly. You can see which ones are the dummy votes. Imagine that, and imagine what it would do to democratic elections around the world. I know that it's always a bit of an issue. Every time there are elections, there's some claims of voter fraud. I know that recently in the US election, there were some claims that certain things happened this way or that way. It doesn't matter which side of politics that you sit on, because if you believe that the truth is on your side, then the truth can be verified by yourself independently on the blockchain if voting happens on the blockchain. It's quite sad that we haven't even started the discussion in Australia about doing something like this. This should have been addressed a long time ago, because the capability is there. The strength of blockchain voting is really in the transparency of the ledger. In fact, the strength of all blockchain is in the public nature of the accessibility of that information. When you hear about things like private blockchains, it's quite a dichotomy, because the whole concept and the power of blockchain and the fact that it is public and the fact that anyone can verify the records is where the strength of it all comes from. As soon as it is not transparent, or as soon as it is a closed system, I mean, I know, for example, that MasterCard have a private blockchain. Well, that's just a private database then. So really, if you're going to create a private blockchain, you're creating a private database that you've only added friction to your existing processes at the end of the day. Transparency is a key strength of blockchain. Inevitably, this transparency is what would lead to fairer elections. When you have all the data accessible, when data is transparent, then that inevitably leads to accountability. People behave differently when their actions are a little more transparent. How often do you deal with keyboard warriors online, and then you meet them and they're like, so it happens. It's the truth, and it's unfortunately human nature. If you've, I know Plato, there was some story of Plato regarding the Ring of Guides, was it? I don't quite remember, but it was along this narrative where if you believed you were anonymous, you will behave differently. Now, ironically, my product is called Anon Survey. I know that sounds like a bit of an irony, because, and the anonymity of that comes from the fact that we don't tie identity to your vote or to your survey response. That's important, because if we could tie identity to responses, then that would kind of defeat the democratic nature of elections in itself. But the tallying and the verification of it should absolutely be transparent. So when all the records are on the blockchain, obviously everything electronic can be tallied up automatically. We no longer need to rely on counters, on people counting these votes manually and of inevitably making mistakes. They're never 100%. So when you have votes that are close to 50-50, we often get recounts. And the recounts are remarkably sometimes different by a percent, which makes all the difference. So imagine eliminating that. All electronic forms of voting can eliminate that, but when it's publicly verifiable, everyone can reassess all that and validate that themselves. Finally, what happens on the blockchain stays on the blockchain. That means that in 50 years' time, someone can go through the records and see the election that happened in Australia 50 years ago. And someone could reassess, reevaluate, re-verify. And I want to say that I know I'm talking about federal elections here, but it's applicable to all surveys. And I know in academia that when you produce a lot of lab reports, theses, whatever it might be, you publish papers, it often involves surveys. And these surveys can be captured immutably in the same way, so that someone in future can reevaluate all the work that you've done, re-verify it, and maybe find something new. And then obviously cite your work and republish and do a lot more with it. At the moment, a lot of those records, well, they reference them in papers, but the physical records are not there in most cases. So I want to introduce that capability that I've been talking about, verifiable voting. It exists, and it's ready, and it can be used. It's called Anon Survey, and this is the application. That's a screenshot of the application. You can register on there, and you can create a new survey quite easily. If you've used Monkey Survey, this is even easier. Standard drag and drop functionality, add the content that you want, the words, the headlines, the paragraphs, the drop-down boxes, the radio buttons, whatever it is, you can customize and create your own survey with as many questions as you want, as long as it needs to be. You have the option below, so down there, to publish the responses to the blockchain. You don't have to do that. Some may choose not to for whatever reason, and you can encrypt the responses. Encrypting responses is important if you don't want it to be publicly available, but you want it to be available to people that you choose. So that's an important aspect of that. Certain people, certain companies will, for example, imagine a shareholder vote. A company may not want that to be publicly accessible data because competitors can make use of that data, but internally, they will be able to independently verify internally with all that. So it was mentioned before, but someone mentioned there was a question about how private something can be made, and it can be made as private as you want it to be made. It can be published, but it can be encrypted. So that's another screenshot. That's a screenshot of a single question survey. In this particular case, it's a merger deal. Should the company agree to the merger deal? Yes, no, or undecided. And in red, there's a note there to say that your form response will be captured publicly on the blockchain, and it's important that people know that when they submit anything that is going to be plastered to the entire world. So the person receiving this will basically just receive this form, and all they have to do is hit submit. They don't need a Bitcoin wallet, they don't need blockchain knowledge, they don't need any of that. And that's the idea behind a non-survey. It needs to be as simple as possible, and all the mechanics of the blockchain world happen behind the scenes. No one needs any tokens, no one needs any, I mean, the token aspect happens all in the background. No one needs any special, they don't even need to know they're using blockchain. They get this, they choose their option, and they hit submit. Even the person creating the survey doesn't need any Bitcoin knowledge or any blockchain or any wallet, because purchasing, the payment side all happens via credit card and PayPal. So you don't actually need to have anything to do with blockchain. That was the idea, to be as easy as possible, because when you want to do a federal election one day, and I hope it gets to that point one day, when you want to do that, you've got, you know, an entire population of people who are some computer literate, some very computer illiterate, and it needs to be accessible to everyone. The last thing you want to do is show people how to, you know, decipher transactional information on the blockchain. It's just not going to happen if you want the world using a product. Of course, just like Monkey Survey and all the rest of them, stats are collated automatically, but you as an independent person can also go on there and do your own count as well. It's all on the blockchain. So the fundamental advantages of all this is that no wallets are needed. There are no apps needed other than the actual application to design the survey itself and so on. No Bitcoin knowledge, and therefore no confusion on anyone. I was going to take questions, but I can talk a little bit more about it because I don't want to, I just realized I'm a little bit early. So I might actually end there, and but if there are any questions, I will gladly take questions after the fact. Is there anything? Yeah. All right. But I hope that kind of gives you a bit of a impression as to the product. But also, I just want to touch on the other product that was mentioned, AMLA. And I know that's been in the works for a very, very long time. It was built by Elas and Co. They did a really good job at building the platform. It is, so just so that, in case you don't know, AMLA is a separate product which was a gold-backed token. There was a lot of discussion about it early on. It is developed, and we are in talks with investors at the moment who are looking at basically tokenizing gold and basically bringing the power of Bitcoin to assets like gold. Imagine being able to transmit gold instantly across the world and having all of the details of that audited and verifiable on the blockchain. So that's the strength of that. And they've worked to make it legally compliant. So it's a bit of a departure from the ICO world, and rightfully so. It needs to be that. That's still in the works, and business often moves slower than you originally anticipate. So that's the reason why it's been a bit quiet on that front. But I can assure you it's still being built, it's still on the cards, and it's still we're still getting investor interest from it. So hopefully we can secure a deal in the very near future on that one. So thank you for your time, and I look forward to Q&A shortly.
All right, thank you, Eli. And the next presenter is myself. And I will be talking about my work at the Bitcoin Association first, and then about what we do at ELAS. So, just having a little trouble getting my slides up.
Let's try going again. Somehow we've escaped out. That's all right. Second. That one. Oh, that's the end. That's the beginning. I need to go back here.
All right. Great. So just to start a little about myself, I graduated University of Queensland 2002. I was lucky enough to get a job where I learned Forth while programming little embedded systems for various different things. And that will become important later. Then I went underground, and by that I literally went underground, building machines for injecting explosives into tunneling for gold mining, which was heaps fun. Went Tropo, went up into New Guinea working on gold mines, went on the gas, so control systems work on the APLNG project here in Queensland. That was a massive project, many thousand controllers, really interesting. Fully charged. I spent 2 years building and designing lithium-ion battery packs for electric vehicles, and then all of a sudden Bitcoin caught my attention like nothing else ever before. And so since 2017, this has been the only thing that I have done. So in Bitcoin, I've done a few various different things. I started out selling little paper wallets for distributing private keys. I worked with James on the original tokenized protocol. I started doing educational videos, which I published on YouTube, which got me noticed by the Bitcoin Association, who then approached me to join them to create the Bitcoin SV Academy, which I'm going to talk about in a couple of minutes. I joined a consultancy called FIRE, and then left FIRE to start ELAS, which is my own company. And lately I've been getting a lot into philosophy, which will come into my talk about ELAS later on. So firstly, I wanted to talk a little bit about the Bitcoin Association and really what it is, because I think there's a few misconceptions about the Bitcoin Association running BSV or being somehow in control of it. The Bitcoin Association is an advocacy organisation. It is a technical leadership organisation, so it coordinates things like the Technical Standards Committee that James is part of. It owns the Bitcoin Sv node client, which it develops on behalf of miners on the network, but it does not instruct those miners on how to use it. It simply allows them to download it and instructs them on how to configure it, but not on what to do. The Lite Client is a new project, which I'm actually very excited about. It has all of the things that people typically have used a node to do, but without the burden of having to download and validate every transaction happening on the network. So it uses Merkle trees, Merkle proofs, and simplified payment verification, as it was outlined in the Bitcoin white paper, to really simplify everything for anyone. And if you're running an exchange, this is something that can really downsize the amount of work that you guys need to do to keep up with transactions on the BSV network. And I see, unfortunately, the lady from the exchange isn't here anymore. But yes. Oh, that's right. Well, I'll talk to her later about that anyway. Terranode is the next generation node client software, and I've seen demonstrations of that doing 50,000 transactions a second. I've heard from very credible people that it's been benchmarked at several hundreds of thousands of transactions a second, but really that is our vehicle to get to millions of transactions or billions of transactions per second, which is where we are planning to go. The Bitcoin Association also has a pretty robust educational program and resources, including the Bitcoin Sv Wiki and the BSV Academy. And there's actually Todd here who helps me a lot on the Bitcoin Sv Academy in the audience today. So if you do have any questions about what we do there, either Todd or myself can help out with that. We do a lot of partnerships with universities all over the world. And we have a growing team. There's always new people joining the Bitcoin Association. It's actually getting big very quickly. A lot of things being covered. I wanted to look first a little bit at the Bitcoin Sv Wiki. So this is actually a lot more important than it might seem. So I actually created the original version of this. I'm still pretty much the only person who updates it, occasionally with help. But it is really our single source of truth. So whenever we write a course in the Academy, if there's any uncertainty about a particular technical question, we always go back to the wiki. And it's what, if it says something in the wiki, that's the way it goes. And so that is the source of truth. It's a public wiki. Anybody can go there. There's a ton of great information about all aspects of Bitcoin. It's fairly technical, so if you need information about the scripting language or how transactions are formed or how to build things at a very low level, it's a great place to start. After sort of publishing that wiki, we started working on the Bitcoin Sv Academy, and this is now growing into something pretty amazing. We have broken down the Academy by streams, and at the moment we have a stream for Bitcoin theory, a stream for Bitcoin development, and a stream for Bitcoin infrastructure. In the theory course, what we are really aiming to teach people is what was the design intent of the system, and without getting too technical, how does it function? And why was it designed to function in that way? And why is that beneficial? And so the first course, the Introduction to Bitcoin Theory, is literally a line-by-line deconstruction of the Bitcoin white paper. So we take that 8-page document, we break it down sentence by sentence, and we're looking at every sentence in the white paper and going, this is why things were designed this way. This is how it enables us to get to this final vision of a global blockchain. In Bitcoin development, we're looking at a lot of the tools that are available to people within the industry, and there's quite a huge collection of different tools. Anyone who's coming to the developers workshop tomorrow will get some exposure to those tools. Not all of them, unfortunately, because that's impossible to fit in a single day. But that development course also encompasses a lot of other what we call primitive courses, which are about more fundamental elements of the blockchain. Then we have the infrastructure course. And infrastructure is really about trying to teach people how the network functions from a systems and infrastructure perspective. So what is it that a node does? Why does it do it in the way that it does it? And how does that lead to the spontaneous formation of this amazing network that we're all using every day? And so the infrastructure course is, I think, important for anyone who's trying to build anything significant on the blockchain, because it's really going to teach you how the system that you're depending on functions, which will really help you to understand where you can push. How can I enter my millions of transactions a day into this without creating problems for myself? And that's a lot more important than you think, because we have had situations where people have started pushing millions of transactions onto the blockchain and doing it in unconventional ways, and they have broken their own systems and caused a lot of trouble. So yes, those are just some of the basic streams that we have. These are some of the primitive courses that we offer: hash functions, Merkle trees, digital signatures. Really highly informative courses that will really teach you how these different things work. And they're all very important for understanding Bitcoin. And we have a lot more coming. So there's new courses being worked on: Introduction to Bitcoin Script, Introduction to Transactions, updated tools, and a lot more. So yes, please do check out the Bitcoin SV Academy. The website is literally just bitcoinsv.academy. Everything is free, so you can go there, you can enroll, you can take the courses, and when you complete the courses, you will be given a certificate that displays on your LinkedIn profile. And I can very much assure you that companies in the BSV space are looking for candidates who have completed these courses. And some of the bigger firms in the space are actually mandating that people who work there go and do these courses, because they are actually finding that the people who've done those courses immediately become more effective at their jobs, because they have such an improved fundamental understanding of the system and of the network. And that is very important, because this is the system that is supporting your apps, your systems that you're building, your money. You're investing into this to make something meaningful, and if you do it in the wrong way, it can all go bad. So, yeah. Now I would like to talk a little bit about ELAS, which is the company that I started about almost 2.5 years ago now. And, but rather than looking at the nitty-gritty, the details of what ELAS does, I wanted to talk more about what it represents and what Bitcoin represents as an opportunity in the context of history, society, humanity, and then we can really start to look at what's possible with our technology. And Mo will be coming up on stage after me to give you a little bit more insight into that. But I think quite a few of you will probably be pretty surprised at what is possible today. So, human history is really only known thanks to the records that we keep, and thanks to some ancient artists and teachers. We have cave paintings and artifacts from many thousands of years ago that tell us a few things about early humans. But in reality, we know very little about prehistoric society. We have vague mythology, some speculation mostly. But it is our recorded history of society which is what we build our knowledge on. And that is represented only by documents that we have access to and can read. And that record really only goes back maybe 3,000 years. Some of the earliest documents are pre-paper clay tablets. Those were used to capture records of account, crop yields, and land title. From the Greeks, mostly we have some tragedy, some mythology, a reasonable account of the socio-economy of the time, but in most of the records generated back from those days are long degraded into dust. From and of the Romans, we have a lot more, but still just a fraction of what was generated at that time. But it's important to acknowledge that in all cases where any society has endured and flourished, it has been because of a central adherence to systems of record keeping and documentation. Democracy, the idea of democracy itself, is a system of government in which the people give their permission to a small group to devise legislation and add it to a ledger of laws. So, during the Renaissance, the inventing and proliferation of the printing press led to an explosion of information, driving literacy and aiding in innovation. This, in turn, had a multiplicative effect on the number of documents being generated for publication and consumption. So in other words, the libraries filled with books. However, the medium of paper does not endure. Without care, it easily degrades or is destroyed. Print documents can also be subject to modification and fraud. And while most people are honest and the system works, most people are honest and the system works. And despite the overhead of growing and cutting down forests, turning them to paper, transporting that paper all over the world, the wide availability of that paper and access to it has spurred people's imagination. And the resultant innovation has led to the tremendous improvement in living standards that we all enjoy today. In the last 40 years, we have slowly begun to replace a system that was based entirely on paper with one where a large array of services are wholly managed via computers and the internet, without a sheet of paper in sight. The efficiency of this medium means that with a $30 device, it is now possible to generate and upload rich content that a global audience can access seconds later. This is relevant to Lamint, relevant to anyone building micro content platforms. Computer storage is cheap, dense, and ubiquitous. But file sharing methods such as email can still result in the creation of multiple direct digital copies of files on each receiver's device. This is inefficient and, like paper, can present opportunities for fraud and manipulation. As personal storage has ballooned from gigabytes to terabytes, we still did not have a simple and easy way to establish an original source for documents. So many core functions of business and government have not moved past the consumption of large amounts of paper. Legal documents and major contracts are still signed with a pen. The solution Satoshi proposed in the white paper uses transactions captured by a timestamping server to track activities within a digital cash ledger. It is the nature of the cache created within that system that makes it ideal as a medium for the capture and record of data for a diversity of purposes. Using the Metanet protocol as a scaffold, ELAS believes that we are the first company to fully realize an open world approach to building on BSV. And now for a moment, I would like you to stop trying to think about Bitcoins as a number or a token and think more about the blockchain as an unbounded ledger in which the cache element is more like a type of paper that you can use to make records. This cache doesn't degrade, and the records that are captured on it are immutable. It can be passed from person to person. It can be broken into millions or billions of tiny pieces, and just like the paper that makes physical cache, each individual piece can be used to represent something much more valuable than the Satoshi itself. In this way, we can use BSV as anything from a simple ticket or a coupon, right up to a bond or a banknote, or a constitution or a piece of legislation with the full weight of law, published in public with the digital signatures of the lawmakers who created it. BSV is a ledger usable by anyone, from an individual to a nation state, to a world body, to record, manage and communicate a registry of assets, resources and decisions. At ELAS, we use our proprietary tools to facilitate the creation of structured data and permission layers for the blockchain. We have a diverse array of tokens and token functionality and tools that allow unparalleled flexibility, scope, and scalability. Property records and asset management databases are just one aspect of what is possible. These can be implemented as a function of government or as private infrastructure, dependent on specific requirements. In many cases, the optimal path is to keep a portion of all data public as an anchor for the encrypted information. Our private ledger system allows you to create a tailored, flexible structure to allow for the most efficient breakdown and control of ownership rights. Many also don't realize that Bitcoin is built to leverage some of the most important features of the next generation internet protocol. ELAS understands this and have designed our systems to readily adapt as new IPv6 devices and transport protocols are deployed. To summarize, what we have built at ELAS is a technology layer that provides all of the tools needed to build your own ledger, within which you have total freedom to create structure, to set right permissions and read access. All of this is possible using the native features that are available to anybody using BSV today. It's important to remember that there are no limits in BSV, so design accordingly. The scripting language offers tremendous flexibility and potential. It is already feasible to manage large documents requiring thousands of separate signatures, to build large-scale content sharing networks, and to create cash systems with billions of daily transactions. Using ELAS with BSV, you really are ensuring that your business, your platform, your service is being set up for scale. For a nation, we can provide ideal ways to manage government services. The system can be structured to give the appropriate oversight in the right places. For enterprise, we can massively improve efficiency by making it possible to build systems and interfaces that operate in fundamentally new ways. There is no other network or system that exists today which has as much potential to change the way we do things for the better as BSV. Across every part of our daily lives, we have a new means to make things cheaper, faster, and more efficient, and more honest. And that's something that's missing. There are no limits to what is achievable, and ELAS stands ready to help you realize what you need. Please come and chat to Mo, Ethel, or myself about what we can do. I'm now going to hand over to our co-founder, Mohammed Jaber, who will take you through more of what's possible and our business offering.
Yeah, thanks, Brendan, yeah, nice to see everybody in Brisbane. I'm from Sydney, based there, and my name is Mohammed Jaber, and I'm co-founder and Chief Operating Officer at ELAS. So ELAS is a digital consultancy focused on solving real-world problems that leverage off the world's most scalable network. But before we can even talk about the world's most scalable network, I want to take you back to the very beginning. When we started ELAS, we started with a simple philosophy, to start with the end in mind. And the first question we had to ask is, what is wrong with legacy technology? And in this context, legacy technology can mean like cloud service providers like AWS, or payment processors like MasterCard and PayPal, or even private blockchains that are essentially like private databases. So we asked ourselves these questions. We had to identify what the core issues were that are currently impacting the customer experience and adding friction. And this would be for entrepreneurs that are building their own applications right up until all the users that are actually using that platform. So that was our driver, and these are the core things that we identified that were the problems and limitations with legacy financial systems that have been limiting business opportunities. So firstly, the information exchange and financial transactions rely entirely on third parties, and also there is poor data integrity. So these systems are inefficient, costly, and easily corruptible. Records can be altered fraudulently without any evidence left behind, and documents can be lost unintentionally due to negligence, hardware failure, or even fire. There's also weak security, so security breaches can happen as they're relying on a central point of failure. So that means that hackers, fraudsters, or even just corrupt officials can exploit these easily. And this leaves environments susceptible to both security vulnerabilities and also compliance for any remediation that follows. And obviously the low scalability aspect, which restricts many things, but in particular the microeconomy. So low scalability means that sub-dollar services are not feasible due to excessive fees that has limited functionality and business models. So then ultimately, now we started with the end in mind. Now we know that, this has completely impacted the experience of the customer and all users because of less functionality and not being able to think bigger about what is possible. So we had to evaluate this with some sort of metrics, from data and infrastructure costs to transaction costs and throughput to network availability and security. And just some examples. So like by leveraging off a public infrastructure like the BSV network, essentially the costs to start are zero. There's no upfront cost to get started, and it's basically pay per activity usage from there on, and just building on top of that to be able to record that information and leverage the information off the ledger. And the costs as well, using the public ledger could cost as little as 1/10 of a cent for any transaction, and obviously that will decrease over time with scalability. And the transaction throughput, at the moment it's about 10,000 odd plus per second, which continues to increase over time, but there is really unbounded and infinite scalability. And obviously the network availability. So in traditional service agreements, there's a general acceptance that 2 to 3% downtime per year is standard. Whereas with Bitcoin, node operators can just come and go as needed. So the network availability is always going to be 99.99% always available, and it's got the track record to prove that. And the security, as mentioned before, legacy technology, even private blockchains, they have a central point of failure. So anything that gets any security breaches can happen as long, and as we've seen that with the big tech companies as well. It's even with the regulations that come out like GDPR, it's not enough of an incentive to deter. Even if they're trying their very hardest, because of the technical limitations of having all information in one spot, so one access point, whereas in Bitcoin that is actually, not only is it unbreakable, but it is actually spread over across all the different private keys. So we use an example use case. So if there was a high velocity company, and there are those that exist today that would say have 10 million transactions per day, that would equate to $1,000 at least in running costs per day for that company, and if they were to use the BSV blockchain, that equates to under $1,000 at the rate of 1/10 of a cent. So that continues to get cheaper. So now that I've given a bit of context about our thought process in getting to using the BSV blockchain, as we are a software services company looking to solve problems, we could summarize that what we came to was that we needed a way for all users to leverage the power of the blockchain without needing to acquire, hold, or use Bitcoin. And when I say Bitcoin, you can think of like any kind of crypto. The kind of process involved in acquiring that is really a barrier to entry. And everyone talks about all the benefits, but really 99% of the people don't care. So what we've done is in this time, we've developed a framework to kind of help entrepreneurs and businesses out there who need to build an application or get their idea off the ground from scratch. We can support with the full service of platform development using our framework Ellipal Plus. If you already have an existing platform, and you just wanted to be able to connect to the blockchain, we have APIs and tools available, what we call DAGDA, that we have, and all of this is possible using the infrastructure, which is already there, already available for everybody, is the BSV blockchain. So the BSV blockchain is obviously, the global public ledger with no kind of restrictions on any transaction size, complexity, or quantity, and is the lowest cost blockchain in the world. So now that I've kind of established, the essence is trying to, building these platforms to connect to the blockchain, I just want to essentially what that means is that on the public blockchain, you can have you can create your own private ledger on that blockchain, on the public blockchain. So that means that any business can operate their new or existing platform directly between their device and the world's most scalable ledger with minimal overheads or intermediaries. So I would like to demonstrate visually how this works step by step in the background. So in the first step, a one-time establishment action is performed, which determines the purpose and rules of that private ledger. This is done by the platform operator, who can be either one or multiple parties. Then the ledger itself is then created, and it will become the anchor to all future activity being performed by the platform operator. Within that ledger, you can also have nested subledgers with highly flexible structures. So an example of this is a nation. They can have constituent states, or for an organization, they can have different divisions. Within any part of the subledger, digital tokens, which we're probably all familiar with, can be created that can actually represent whatever is needed by the platform operator. This can be for a service, rights, or a digital representation of a physical object, or even fungible cash-like instruments. And finally, when digital tokens are issued from within a subledger, they can always be traced back to the ledger's anchor, which provides irrefutable proof of provenance back to the very issuance transaction of that private ledger. So just some examples. Obviously we do create platforms for clients, bespoke solutions for clients, but we've also got the ability to develop our own products, and for example, we've developed Baymail, which is like a peer-to-peer encrypted mail that has microtransactions attached to that kind of eliminates spam. We've got Signavera, which is our federated productivity suite to manage your money and business affairs all on Bitcoin, which I'll talk more about later. And Rounddesk, which is like a professional networking tool similar to LinkedIn that has unique functionality using microtransactions. So with our framework as well, so we've built those in-house products, but we also really like to help all types of people, with their businesses. And what I've got up here is all of the clients that we've engaging with to date and presently, and it is a testament to the flexibility of our technology that we've been able to attract such a diverse range of customers because through our engagements, our objective is always ensuring that we focus on the pain points that we've identified with legacy systems or processes. And then we design bespoke solutions that deliver transformative efficiency improvements. So with the examples that we've got here, I would like to show you how versatile our technology is across a variety of different use cases. So examples such as conducting a digital transformation of a nation state, Tuvalu saw the opportunity and engaged us to commence the design phase of the groundbreaking Tuvalu National Digital Ledger. Through many hours of workshops and interviews with the governments, banks, merchants, and residents of Tuvalu, we uncovered the key limitations today, and they form the specific requirements of the ledger design to fundamentally revise government services to be delivered without paper. So other use cases include the tokenization of gold on the blockchain to replicate the existing gold certificate process digitally, so with added functionality like staking, transparency, security, and fungibility like cash. With this technology, we've also been able to help companies that are in industries with outdated business models such as publishing houses to be able to monetize and access a whole new global reach of customers. So BuzzMint is one of our customers, and they're developing a platform to enable a simple way for brands to be able to create and distribute content on the blockchain with added utility that provides special access to content, art, events, and more. Even within the construction industry, one of our clients, 2A, is developing a first of its kind platform that enables a micro delivery service. So it connects 3 different types of users in an industry together and streamlines the ordering of materials on demand. And ultimately, the gap and in limitations in what was available in solutions in the market is what brought our client towards a solution on BSV. With this technology, we've also been able to address the counterfeit problem for luxury consumer goods. Client Manufact is focused on solving the loss of funds to illegitimate markets whilst also increasing consumer confidence. So the merger of our ELAS Plus technology with existing technologies such as RFID not only minimizes disruption with existing business processes, but enhances it by providing functionality in new ways by linking digital and physical items together. It is even possible to identify global problems such as the identification of livestock in industries that are dealing with convoluted data structures that are neither indexed nor anchored to a unique digital object. Bloodstock has a vision for every horse to become a unique, dynamic digital object tied to lineage, with genealogy, medical history, and more that can be enriched with data by different stakeholders within the industry. So as mentioned before, we have also taken advantage of what's there and seen a gap in the market to develop an in-house product called Signavera. And Signavera is a federated productivity suite that combines collaborative multi-signature technology with an array of tools that allows you to manage your money and business affairs entirely on the Bitcoin network. Federated means that we can deploy it on your domain, which gives you full privacy, security, and control, and also have your own address PayMail extension that is also linked to your company. It's also a non-custodial wallet that allows you to have up to 10 parties attached to that account. We can also white label and modify it to handle any other requirements that your organization needs. So as of today, Signavera can be integrated with Microsoft Teams, and organizations can leverage a seamless experience of single sign-on with their company credentials to be able to do things like obviously countersign any documents or any other collaboration tasks that can happen within an organization. So since the release of Signavera, we have listened to the feedback of our customers and what they would like to see in future releases, and have developed an extensive roadmap that includes integrated on-chain document management with simple multi-signature workflow, the creation of invoices and delivery using BSV as a signature rails, spam-free email on-chain that provides a secure experience, calendar, appointment, and event scheduling on-chain, and full voice and video delivered securely over the BSV network. So back to the original driver of when we were kind of coming up with the problems we're trying to solve and how we're going to do this, obviously with our framework, ELAS Plus, and our tools, DAGDA, to provide to users who have their existing platforms is, we wanted to have a way for all users to leverage the power of the blockchain without needing to acquire, hold, or use Bitcoin. In order to do this, we need to remove all complexity and barriers to entry faced by all types of users for them to be able to benefit from this revolutionary technology. So we do this actually because at ELAS we have a unique proposition, is that we would actually provide a managed service on top of that to handle the supply of Bitcoin tokens needed for your business to use the public ledger. So obviously every activity and action is the right to, it is attached a small fee that goes to the public ledger, but we will handle all that so in other words, that if it's not a requirement for you or your customers to actually have Bitcoin displayed on the platform, then it can be completely invisible in that experience. So we're using the Bitcoin network as the rails, and nobody really needs to know or acquire Bitcoin in order to benefit from that. So there's no problem that we can't solve using Bitcoin. We would love to hear about the problems you're trying to solve to help make Bitcoin work for you. So come and speak to us today. Thank you.
Any questions?
I'll say a little bit about the scalability, just while you're thinking up of questions. So we did with the Anon survey tool, we did a stress test in the days where it was called BVote. It had a different name. We did a stress test to see if it could handle the population, the voting population of Australia. The voting population of Australia is about 17 million, and we generated many millions of transactions, obviously not actual people kind of voting, but they were simulated, and they were published to the blockchain. Millions of votes, and we pretty much found that we could do the entire voting population of Australia within a single day, and that was before later enhancement requests, later enhancements to the BSV blockchain. So it was capable then, it's capable now, and if you think about it, 17 million transactions when it costs 1/1000th of a cent per transaction. That costs a couple $100 at most. That's a conservative figure too. So really try to imagine that on any other blockchain. If you want to know why I use BSV, that's a bloody good reason. It's hard to imagine something like that happening on another blockchain, because most blockchains, with demand and usage, the price of transaction goes up. So if you're doing 17 million transactions in one day, chances are you're going to reach $300 per transaction and higher. And do the math on how much that's going to cost for 17 million.
Just a little bit on scaling as well. So a bit of a funny story. After the Bitcoin Cash split, we had another hash war where Bitcoin Cash separated and the Bitcoin SV network kind of went on its own. And I was actually in London at that time, and a friend of mine named Eston and I worked together to create a robot to stress test the network. And Eston is a pretty great engineer, and he really over-engineered this thing up the wazoo. Like, he had little bots all over the world that could ping the network with thousands of transactions every second. And So after the split had taken place, we began blasting the network, and we hit it with 24 million transactions over about 6 hours, which we thought was great and heaps of fun and a massive gas. But really what happened is the entire network fell over. Every single service, wallet, website attached to the network stopped working. And so there's a cautionary tale in that, which is that while scale is possible, it's actually quite hard. You know, we stand up here and say, yeah, we can do this, it's great, it's working now, but that is through thousands of hours of engineering and design and effort to build these systems to be resilient in the face of such activity. But I can confidently stand in front of you today and say that if Esson and I tried exactly the same thing that we tried back then, every single one of those transactions would easily make it into a block. No problem at all. I've done stress tests that have been 5 times more intense in terms of the number of transactions per second, even 1-2 years ago, and never had any problems at all. So really the growth in capability is quite amazing over the last several years. So yeah, just a bit of an anecdote.
There was a question at the back there. Was it Rita? Yep.
Not so much a question, but we had a discussion just before you got on. Great presentation to the both of you. I was telling you about a country that I knew that was doing voting. I actually researched it, Sierra Leone, and they're the first country to do voting on the blockchain. Right. And I think it's Agora blockchain. I myself haven't heard of it. Yeah.
Okay. Do you know how many millions of transactions that would have been?
No, I just briefly,
right.
I didn't delve into it yet.
Thank you. Yeah.
I think the important thing to say in any kind of voting is that whatever happens on the day of an election, if it's 20 million transactions like in Australia, or 200 million like you might have in America, or 1 billion like you might have somewhere like India, all of that has to happen over and above the regular daily traffic taking place on the blockchain. So, you know, if you're already in a situation where the blockchain is full, you know, it's impossible for you to actually do anything new. You need to be in a situation where no matter what the demand, that the network can satisfy that demand. So, yeah. All right, great.
Okay, thank you.
Got another question?
Sorry.
Yeah, sorry. As mentioned, there is a trilemma. Could you elaborate more on how security is ensured?
Well, all security is economic in nature. There is no security that just comes naturally from you doing things in a particular way. There's a cost, there's engineering that comes to provide that security. And really, what we're saying is that without the correct economic foundation for the scaling of the network, there will never be a scenario where the revenue generated by processing transactions will be sustainable enough to maintain the security of the network. And so security is economic. It's not something that you can just bake in and it's there forever.
From technical side, for example, double spending, safety, liveness, or finality, do you achieve the same level as Bitcoin?
I would say we achieve a much better safety than Bitcoin, because actually in Bitcoin, and this goes back to what I was saying before, that they've actually destroyed the protocol. In Bitcoin, they have actually engineered a system for double spending. It's called replace by fee. Has anyone ever used replace by fee? I know I used it once. And that is actually the network allowing you to double spend your coins. And I remember a story about a guy who was robbed in his house. They came into his house, threatened him with a metal pipe, told him to transfer all the Bitcoins, and he double spent them back to himself using RBF. So, I mean, that's the one case where I would say that's,
well for him.
that's a good thing to have. But the reality is on BSV, because like what James was saying, within 2 seconds, you can get a response from the network, from all of the major nodes, saying, we've accepted your transaction. We've validated it. We've now put it into a block template, and we've already started to spend money doing proof of work on that. That's all you need. At that point, there is no ability for anybody to double spend that transaction. So within that 2-second period, you get all of the double spend certainty that you need.
Just a comment, with that 99.99% security that you get using the callbacks from the miners, you also have coverage of that 0.001 because the person who is engaging and facilitating the double spend is making an attestation on chain of their collusion in allowing that transaction to occur. So you can then fall back to the legacy systems of the legal system to go, oh, we're going to pursue that person for colluding to pass a fraudulent transaction. So you've effectively, by working within the law, you do have 100% coverage because every record on there will exist in perpetuity.
Yeah, that's a good point. So you get the technical...
Just a little bit more. What if there are like transactions you submit to the network, but then this transaction could be verified at the same time by 2 nodes? There may be like this transaction immediately verified by 2 nodes at the same time, and means that this transaction could be logged into the blockchain twice.
That's why you wait the 2-second, because the 2-second coverage ensures that whichever of those got it first, because it's never precisely the same time, one of them will be picked between those two, and that will be the actual transaction that goes through. That's why that waiting period is important.
Well, just to add a bit of colour to that, some of the discussions that have been taking place among nodes is essentially what they're saying is that if they do detect a double spend, they'll just reject both.
Both, yes.
And because there's no certainty that the person submitting those transactions is acting with good intent. And so they are not beholden to you. You're paying them for a service, and just like any business, they can reject your request.
And they're legally bound by it too. I mean, if they knowingly know that they received 2 and one of them's fraudulent, then they're accountable as well. All miners are known. There are no real unknown miners because miners are such large infrastructure bodies that it's very hard to operate anonymously anyway.
Thank you.
I think that's it. No, one more, Rowan.
I guess for the ELAS guys, being in the development space, I noticed the new bit of software out that enables you to convert from Ethereum and Solidity over to Bitcoin SV. Have you noticed much or businesses approaching yourselves in regard to support with that? Obviously being able to bridge their technology over in a way which actually scales and becomes more cost effective, because that seems like some easy wins for people out there in the space that are developing to be able to kind of bridge on over and actually scale.
Sure. So just on that, so that's called the Transpiler project, and that's something that we'll actually be going into a bit of detail on tomorrow in the developers workshop. So for anybody who's coming tomorrow, we already do everything natively in Bitcoin script. So really most of the customers who come to us already know that they want to build it on Bitcoin. They don't have anything that they've already pre-configured for another blockchain. So it hasn't really come up for us, but I do know that the Transpiler has been getting some pretty serious interest among the development community. Like people are very interested to see, if I take this smart contract that I wrote, I plug it in, what happens on BSV? And the results are pretty outstanding. Very low cost operation of those smart contracts compared to what they would pay on the Ethereum network. So yeah, you can essentially put Solidity straight into the builder, hit build, and it spits out a bunch of UTXOs that mirror the exact functionality of that smart contract, but running on BSV. It's a pretty amazing project.
Yeah, that's a tool. In case you hadn't heard of it, the Transpiler that enables most of the smart contracts that we call in the ecosystem have already been built on Ethereum. Ethereum was really one of the big drivers of smart contracts in the early days. Obviously, they have high gas fees, and so a lot of them are looking to port their applications to other blockchains. And BSV has a tool that will enable the transpiling of a lot of those smart contracts. Not all of them, but quite a lot of them. If you have any Ethereum smart contracts in Solidity, I'd recommend looking into it.
Can I just say, what about layer 2? Do you think that's going to solve everything on Ethereum?
I'm happy to grab that one. So, I mean, I think, So the way that layer 2s are being built in the crypto landscape is really not what I would call a second layer protocol. So if you work in like the internet, so think about TCP IP. Everybody has heard about TCP IP. That's how most of traffic across the internet is supported. But that's actually two protocols squashed together. It is Internet Protocol, and then inside Internet Protocol is Transmission Control Protocol. And so what's actually happening is Transmission Control Protocol information is being inserted inside the Internet Protocol packet. That's how protocols work. What second layer protocols in crypto typically ask you to do is to stake your funds into an output and never touch them again. And then they reissue you other tokens that represent these tokens that are held here on a completely different network, using completely different software, completely different consensus system, uses a different wallet. It's not compatible with anything that's over here. And it's really, actually, I think, dangerous. A lot of the hacks that are taking place are in that sort of bridge between the two networks. In BSV, so I've spoken a couple of times already about the Metanet. The Metanet is what I would call a second order protocol, but it's actually a protocol that's inserted into the Bitcoin transaction. So you have a transaction that's in Bitcoin protocol, the base protocol, and then inside that transaction, a subset of the data is a Metanet protocol packet that's instructing the person looking at it what this node needs to look like, how to unpack it, how to view it, what it points to.
So it doesn't affect the bottom layer in any way.
So the bottom layer needs to be flexible and extensible enough to build many protocols into that. So yeah, I would be very skeptical of any second layer that is actually just a different network and with its own crypto. You know, it's not really the way that you would approach a second layer building from a protocol perspective. And the only reason they're doing it that way is because the base layer protocol, where the asset they're trying to use is held, doesn't scale to allow them to do what they need to be able to do. So it's a hack on top of another hack. And you know, it shouldn't have to happen that way. All right. Any further questions? Otherwise, I think that's our break for lunch.
Enjoy lunch.
Thank you, everyone. All right, we'll just wait another minute or so for everyone to come back inside. How good was that lamb? Tasty. Oh, I missed that one. I might have to go back. Okay. Give everyone another 30 seconds or so. That's what we need. A real shepherd of the people. All right, everyone, we might get started. Our next talk is from Paul Chiari of MetaStream, but Paul is also notable because he created Weather SV, and I think a lot of people in the BSV community would remember a time just a couple of years ago where we became known as the weather blockchain because something like 95% of all transactions happening on BSV were logging weather data. But I think it speaks to the utility of the blockchain that something like Weather SV could become so viral and so popular. I think they've logged something like in the order of 200 million weather readings from all around the world. And if you go to weathersv.app, for about $2, you can buy enough credit to sponsor a channel for something like 8 years. And what that $2 will pay for is hourly logging of all of the weather data from that place onto the blockchain for sort of 8 years. And that costs about $2. So you can see how cheap this really is to use when things like that happen. And so those 95% of all transactions happening was just organic, people going to Weather SV, signing up for channels. I myself sponsor about 50 channels. So that really means that on my own, I'm doing several thousand transactions on BSV every day. It costs so little, I don't even care. I don't even worry about it. It's fun. It's a public good. I think this weather information that we're logging on chain is actually a super important part of something greater. In 100 years' time, when we're arguing about why the seas rose up, we'll at least have some reliable data that tells us what the weather was today. So anyway, Paul couldn't make it here to be with us, so his talk is pre-recorded, but I'm going to let him speak for himself. So Paul Chiari from MetaStream and Weather SV.
Hi all, and thanks for attending Brisbane's first Enterprise Blockchain Conference, sponsored by the Bitcoin Association and ELAS Digital. My name is Paul Chiari, and I'd like to share with you some of our developments over the last couple of years and demonstrate how our suite of tools can easily be used to develop enterprise-scale blockchain solutions today.
Much of our journey to date with blockchain technology comes from a desire to solve problems of waste and inefficiency that plague many industries and supply chains. Sustainability starts by doing more with less. It is about reducing the waste and inefficiency in each step of a process. Industries such as agriculture directly natural resources like land, energy and water. Waste in agricultural production and supply not only impacts the sustainability of the industry itself, but the very resources that it relies on. The unshackling of Bitcoin in 2018 was a significant step that gave us the confidence to start to build on ideas on how a public ledger can enhance the value and veracity of data. This led to the development of Weather SV, which became very popular, and we soon had thousands of active weather feeds recording climate data to the Bitcoin SV network. Weather SV has now recorded more than 140 million climate updates from around the globe to the Bitcoin SV ledger. Weather SV development is now focused on integrating private weather stations directly to the platform, allowing users to own and monetize their climate data contributed. MetaStream encapsulates much of the experience we gained in the building and scaling of the Weather SV application. It is essentially a suite of tools for integrating blockchain technology into virtually any application device or data source. It removes much of the expense and complexity involved in developing blockchain solutions, as it requires no specialized skills to integrate the technology. At its core, it is a best-of-breed transaction building and broadcasting service, capable of supporting the most demanding applications. Anyone can set up an unlimited free testnet account today and get started on a blockchain project. The portal makes it easy to manage funds, API keys, UTXOs, addresses and requests. It offers customizable broadcast plans featuring different fee rates and service levels. Broadcast options currently include peer-to-peer or MAPI integration through Tal and Ellipal. When ready to go live, we have monthly access plans available for the Bitcoin Sv mainnet. Metanet describes interfaces we enable connectivity to the platform. Firstly, our application programming interface, or API, allows developers to simply integrate applications with the BSV network. It facilitates posting of transaction data and reporting on the status of the broadcasts. Documentation for the interface is available through our client portal. Please reach out to us if your requirements extend beyond the scope of our API, as our transaction templating system now makes it easy for us to support virtually any valid transaction. Additionally, we have developed tools and processes for enabling IoT devices to realize the potential of blockchain integration. In combining these technologies, we are building what we dub the Ledger of Things. Markets for verifiable data and microtransaction payments for its collection and dissemination will greatly enhance the utility of the IoT industry. Utilizing well-known IoT integration and development platforms, such as the Things Network and Node-RED, we now have multiple IoT devices, including weather stations, with established BSV network connectivity. Thanks to the wonders of a pre-recorded presentation, I feel emboldened to attempt a not-so-live demonstration on how easy it is to build the foundation of a BSV application using Node-RED and MetaStream. So once you've created your free testnet account, you can log into our portal. The first thing there is to just add a client. It's quite simple, just give it a name and choose from some of the different fee rate options and whatnot, create that. Using individual clients or for individual projects and whatnot just allows you to account for them independently. Now if we go into this one, we can now manage the client itself, and first thing we need for any kind of application like this is to create an API key, and we just give that a description, and we require write access for an application like this, so we create that API key, get a copy of it. Now we'll now flick over to our Node-RED interface. So Node-RED is essentially, it's an IBM open source IoT development platform. It's very widely used due to its simple yet powerful flow-based programming interface, which you can see here. So essentially, you can choose from a whole range of pre-built nodes and custom nodes that are created for various functions. In this simple application example here, we use a pre-built test injector, which is essentially just emulating a data flow from a source such as an IoT device, which then moves into a couple of our customized nodes, being for the op return script and then passing the data MetaStream to be built and broadcast to the network as a transaction. And we have a little message handler over here for debugging and other purposes, similar purposes. So firstly, to inject our data into the application, we can look into here. We just set the payload. In this scenario, we're just using the name and place and date of the conference. Once that's done, that's set into there. We have a couple of variables with our MetaStream node. Firstly is the endpoint and the API key, which we've just created and can now paste into there. Once that's done, we can save that. And we should be right to deploy our script now. So once deployed, we'll see down here the MetaStream
node returns us with a broadcast ID. Now that broadcast ID, if we move back over to here into our portal, we should see in our requests, and there it is there, 392. So by looking at our requests, we can now see that we have a transaction ID returned from the BSV testnet network. We can take a copy of that and move over to a blockchain explorer such as what's on chain, and be careful up here, just make sure that we're on to the right network, in this case the testnet network. We can paste our transaction ID into there, search on it. You can now see that it's got to the network, although it's still unconfirmed. We've got our op return output here, which we can see contains the message that we set in the payload of the injector in the Node-RED application. Metaproof is our implementation of simple payment verification. SPV will become an essential component for building many Bitcoin applications on a highly scalable Bitcoin protocol. As the transaction throughput increases, maintaining full modes will become increasingly unsustainable. SPV is a method to prove the existence and veracity of a transaction without having to keep full copies of all the necessary data. This is achieved through providing only the information needed to calculate a Merkle or hash proof for that transaction. These services are available to all applications utilizing the MetaStream platform. Our implementation follows the guidelines of the Bitcoin Technical Standards Committee to ensure compatibility with other applications and initiatives. In the diagram here, we have a typical Merkle tree structure that may represent a Bitcoin block with the root hash at the top of part of the block header. At the bottom of the tree, we can see transactions streaming onto the network. If I want to verify the existence and veracity of transaction number 4, then I can make this request from an SPV server. It will return the necessary hashes required to calculate the root hash and therefore prove the validity of transaction 4. The hashes returned by this query are highlighted in red. As I already knew the hash of my transaction number 4, I can now calculate the complete path back to the root hash. Metastamp facilitates the use of a public blockchain in creating verifiable proof of data stamps. Publicly certifiable data trails have significant application in virtually every industry and are increasingly important in adhering to regulatory frameworks and mitigation of risk and liability. Building from our SPV implementation, we can now use a similar methodology to build data trees that are used to validate individual data points within much wider data sets. As a technologist that has followed the rise of Bitcoin over the years, I was dismayed when the Bitcoin core developers refused to increase the block size and deal with the congestion that hampered the network. When the Bitcoin network becomes congested, both the fee rates and delays in processing those transactions increase. This may have little impact on high-value, low-urgency transactions, but it makes any further use cases unsustainable. BTC has forgone any real utility other than as a store of value. The core developers' inability to scale the Bitcoin protocol without overlaying external scaling solutions eventuated in protocol forks and the restoration of the original scalable protocol in Bitcoin SV. Virtually free and instant transactions are important for many applications requiring data services, microtransactions, high volume throughput, or stable and low fees. As seen on the chart, BTC is continually maxed out with its 1 megabyte blocks, whereas BSV blocks are averaging around the 100 megabyte mark, with capacity to spike above that as required. If
technology is to survive and prosper, then it needs to solve problems and work reliably. Unfortunately, most projects in blockchain space do not meet this simple criteria. While private blockchains may solve some of these issues, they don't enhance transparency and trust that are central to the blockchain concept. The Bitcoin protocol has proved itself to be capable of all things that Ethereum and other cryptos were developed to address, such as smart contracts and tokens. If the predicted levels of scale can be achieved over the next couple of years, then I believe BSV is the best place to meet the demands of enterprise-scale applications built on blockchain technology.
Thank you for taking the time to listen to our presentation. We look forward to participating in tomorrow's developer workshop. But in the meantime, take care, and we hope to see you live in person at the next conference. Bye for now.
Always great to hear from Paul. Have a great time. And normally, when I'm seeing Paul, I'm also seeing our next presenter, who is Daniel Keane from Predict Ecology. Daniel and Paul have collaborated on some pretty amazing stuff, which I'm sure he's going to be able to tell you a lot more about. But I think you've got something like trees on the blockchain. Yeah. Huge number. Whoop. Oh, that's easy.
Thank you. Lovely to be here. As Brendan introduced me, my name's Daniel Keane. I'm co-founder of an ecological consulting firm called Predict Ecology. So here's a photo of a mountain stream that I know in the wet tropics. And I'd like you to think about what's happening here. I'd like you to think about the natural information, the processes, the natural capital. So there's water purification, hydrological and geological processes. There's air purification, photosynthesis, carbon storage. Obviously there's biodiversity, plants, and presumably animals. It looks like a pretty fishy sort of a stream. Collectively, there's these ecosystem services, and it's natural capital that's based on interactions. This, however, is only one snapshot in time. Let's say that the exposure was a second. That would mean that there's 86,400 of these snapshots just in one day. And this is a high volume, high velocity, huge data set. So, human beings are very busy. They're always moving and always changing. And as a result, natural resources can be easily overlooked. They're around us every minute of every day. They're where we live. But because we're busy with our lives, it's easy not to notice these services until something's not right. Something changes. And this is called degradation. Degradation of land, water, air, biology, and culture. Now, these are a very simplified example. But for example, land. We have soil fertility issues. We have groundwater issues, rising of groundwater. We have salinity, desertification, and erosion. With water, we have water pollution. We have sedimentation and changes to hydrological flows. With air, obviously, we've got carbon. Everyone knows about that. But we also have things like ozone and PM10 and sulfur dioxide, and the list goes on. When it comes to biology, we have species extinctions, habitat fragmentation, and poaching of CITES-listed species. On the human front, we have loss of language. We have cultural site degradation. And unfortunately, we have loss and theft of First Nations intellectual property rights. So we're on the brink of a global precipice. Biodiversity collapse will change the ecosystem services that we have come to expect and that we take for granted. So how do we prevent this? Well, we start recording the complexity of the natural system. We value it, and we use this understanding of the complexity to improve our sustainability, and we do so using BSV. So we hear this sustainability word used to assist us in preventing this degradation, a way of being mindful of the interactions that we have. Now, I like to think of sustainability as an interaction between humans and the natural system that does not damage the value of the natural system, and by extension, an interaction that can be achieved in a regenerative, dynamic way, a self-sustaining interaction. But how? Well, we must first know what we are doing. And for that, we need empirical real-world data. So we've got to go and measure things. From that good data, we can then make models and inferences and track trends over time. This example is a machine learning dataset and model that I've produced to predict litter, grass, and tree cover, I think it was. Yeah, something to that effect. Okay, but good data is hard to find. I want data with volume, so I want lots of it. I want data with velocity. I want it to be current. I want data with variety. Ecology is complex, so let's not simplify this. I want veracity, because it's absolutely worthless if it's not accurate. I want value. I want to be able to do rigorous analysis. And if it's not accurate and not verifiable, how can I use it? I also want valid data. So I want data that's directed. What are you recording and why? So where's the good data? Well, there's open science, there's government data, there's university data, there's consultants data, there's citizens data, and there's First Nations data. There are many frameworks developed by many brilliant minds that are trying to solve sustainability while supporting development. One such is the United Nations Environmental Programme. Sorry. Now, I've been involved in sustainable development of natural resources and permitting for most of my life, most of my career. And one such tool that I've used is an ESIA, so an Environmental and Social Impact Assessment, or an EIS, an Environmental Impact Assessment. So in my state of Australia, Queensland, an EIS is defined as a rigorous assessment of the environmental, social and economic impacts. And it sort of goes a little like this. So a proponent will submit a draft terms of reference. That draft terms of reference will then go out to public. The public and the government will be able to comment on it and make alterations, extra little bits that they want to see in this impact assessment, this report. The EIS is then, the terms of reference is then finalised, and the EIS is then publicly, the terms of reference is publicly notified, and we can now start our EIS report. So an EIS provides a comprehensive description of the current environment, all potential environmental, social and economic impacts of that project, and the development of proposals to manage, mitigate or offset those potential impacts. So these impacts may be direct, indirect, or cumulative, and they may result from the construction, commissioning, operation or decommissioning of the project. Their scale, that is their relative magnitude, of the impact is determined by its intensity, duration, irreversibility and risks to the environment, society and the economy. So this process involves multiple public hold points and notifications to ensure that the public, the people who will inherit this project, who will inherit the legacy issues and whose land it is built upon, have their say. The proponent must evaluate and respond to all of these public and private and regulators' feedback. Finally, all things being done, the EIS is finalised and the project is permitted and is allowed to operate. But this rigorous data collection, this very expensive rigorous data collection, often ends up in silos. So here I have 3 theoretical projects. You can see the little silos with their data sets. To my knowledge, this data is not shared. The consultants doing EIS 1 for the dam may not even be aware that the farm, EIS 2, is even taking place, or that the data even exists. Surely some of this data can be shared. Could the data inform the cumulative impacts and residual impacts of these projects? Could the landholders be utilised to collect this information? Could this data be sold? And could the collector be paid for it? So this is how the progression of my data collection has happened. Back in the day, dark days, I used a digital or analogue collection method. Notepads, camera, GPS. I then progressed onto IoT devices, and it was still fairly centralised, sometimes a little bit distributed depending upon the camera or remote cameras or whatnot I was using. Now we're embarking on full IoT. Now these are additive and cumulative, and in an idealised scenario, this will allow the unsiloing of data. I need to collect it digitally first. So this is what my data looks like. SQL tables linked via a UUID. This allows the analysis, manipulation, and storage as flat files or vectors. It lends itself very well to long-term blockchain storage, validation, verification, and auditing. I use this method in various client-specific ways for the collection of all my consulting data. And here's some data I've loaded on chain. So this was a relatively small data set that I loaded in 2020, 2.4 gig, or about 11.2 million transactions. Back then, it cost about $960 to load those 11.2 million transactions. As of Monday, or last Monday, when I wrote this, it would have cost me $96. And I've now since been told that that price has floored even more. It would cost about in the order of $20. 11.2 million data points for $20. So, our techniques have also improved since then. Here's an example of some tree data that I loaded onto the BSV blockchain and used varying H3 resolutions to calculate species diversity. What I've shown here is tree species diversity in the city of, I think it was Geelong? Yep. But this data could be so much more. It could be water rights. It could be water extraction values. It could be water quality. It could be mineral resources and licenses. It could be tons of wheat or rice produced in a field. This data can be layered. It can be interrelated, correlated, analysed as stacks. So since 2020, Paul Chiari, the fellow that's just spoke before, has included some additional tools that I utilise. So here is the Merkle root of a 200 megabyte spatial data set. Each data point was encoded and hashed. These hashes were then combined into a Merkle tree as per the diagram, and the root of that Merkle tree was included into an op return of the transaction, which I've highlighted here in yellow. So with this technique, I'm able to prove the data's integrity. Using MetaStream's suite of tools, we have encoded it, hashed it, and created a root of the Merkle tree. And that went into the op return. It's on the blockchain. So say you want to use my data. You purchase it, I send it to you, and you verify it. This is blockchain. This is smart trust. You can encode it as previously described, then use the hash and the Merkle proof of the transaction, which you can see there on the left, to calculate the Merkle root. You can then verify the leaf's proof for any random data point. Now, you may not want to check all of the data points. Some of our data sets can range up to 3 billion rows in lengths, but you could if you wanted to. In this example here, I've used the leaf proof for index 32, a bush food tree. And this can verify the authenticity, accuracy, and veracity of the data sets. So back to my example of an EIS, but this time with a little bit of blockchain integration. Same process, but firstly, the terms of reference are issued as a draft smart contract and then compiled as a distributed application. The public can then interact with this distributed application and provide traceable and auditable input. The final terms of reference can be issued as an application either on Metanet or as a smart contract, and it can be authorised by various multi-party signatures. So we're talking about government departments, proponents, stakeholders. And this is where it gets cool. The technical studies, the field work, the data analysis, the risk assessments, the management plans, all of these really important, really valuable tools can be made traceable through blockchain from raw data through modelling and analysis to the derived management decisions with all the data on chain. So then the draft EIS is published. It can be published as a smart contract or a distributed application. The public can then respond to it, make comments, it can be peer reviewed, and all of this information can be traced, audited and tracked. Finally, the EIS report can be issued as a smart contract with multi-signature parties, various government agencies being able to then sign off on it. This data is now no longer in silos, but on a permissioned public-private contract, smart contract, Metanet, DAG, there's various opportunities there. We'll work out what we can finally use. But it'll allow future consultants and proponents and the public to possibly access and audit and learn from this data. To take this a step further, the permitted project can now be regulated by a smart contract, with monitoring and management results being instantly auditable and verifiable. This will improve our environmental and ecological management. And this conceptual example of how blockchain might fit into a mature regulatory framework, such as an environmental impact assessment, it can be used for so much more in the natural resource management and sustainability stage, because we need to remember why we're doing this. So this is a little 10-second clip of one of our remote cameras. That's a red-legged pattymellon, and it's just doing its thing. Thank you.
Thank you, Daniel. And I think one of the things I love about the work that Daniel does is it's extremely outside work. So he goes out, he gets wet, he gets dirty, he gets leeches and ticks and all kinds of things, and then he walks home and he's using some of the most advanced blockchain tools that we have available to us. And it's a fabulous example of how this works. So for our next presenter, we're going to hear from Michael Choi, who is CEO of Panda Angel, and he's going to tell us about My Fabula. So,
thanks very much, Brandon. The researchers have repeatedly said this. The worst time in the day to communicate, to persuade people is about 30 to 60 minutes after lunch, which is right about now. So if I can just ask you to stand up and say hello to the person next to you, say something really nice about them, even though if you have to lie. Just stretch your arms a bit, yep. That's okay, don't get carried away, you can sit down now. Thank you. Thanks very much. Okay, please be seated. Now you are wide awake. So can I start by acknowledging the organizer for today, Brandon and Ethel. Nothing happened by chance, and they put a lot of effort into this. So just put your hands together for Brandon and Ethel. I also want to acknowledge my business partner, Professor Robert Lee. He's the technical guy behind all this. I'm just the talker. All right, so you'll be hearing from Robert in a few minutes. I have a very funny habit. So I used to work for the government. And I get sent around the countryside and to do things for the government. And I get to go to small towns that I usually don't go to, all right? Regional Victoria and particularly in Queensland. So there's one thing that I always want to do when I go to a small town after I've done my business is to go and speak to the locals. So where would you go, say in regional Queensland, a small town of maybe 2,000, 4,000 people, where would you go to talk to the locals? The pubs. Absolutely the pub. There's two problems. Number one, I don't like to drink. And secondly, after a long day of work, the last things I want to do is to listen to other people's problem. There is another place, though, that I can go and speak to the local, where I don't have to drink. And they don't tell me their problems. Where would that be? I love to go to visit cemetery. Yes. Now, in your mind, a cemetery looks like this. No, I don't go there at night. I'm not that stupid, right? This is what a cemetery usually looks like. I love visiting cemetery because it tells you so much about the story in that place, about the people, about the town, about the culture. In the past, when you go to a cemetery, you see the big tombstone. Here lies Michael Choi. Well, hopefully not too soon. About where he was born, a little bit of history about him, and when he died, you know, missed by everybody else except his family. No, it's only joking. But in recent times, the tombstone from that size getting smaller and smaller and smaller, it become a little plaque. Measure 150 millimeters by about 200. And on it, it's your name, when you're born, when you're dead, and at best, missed by a couple of people that close to you. Am I correct? That's your life. That's your life. Summarizing less than 30 words, is that all there is to be told? Really? Really? I used to work a lot in the multicultural community. We have over 150 cultures in Queensland alone, 160 languages. And let me tell you, whether you are white or brown or blue or pink, whether you are a Christian or Muslim or Buddhist or atheist, whether you are heterosexual, bisexual, multisexual, I don't care who you are. Every single person has a story to tell. Am I right? Do you agree that every one of you has a story to tell? And it's so true. Let me ask you this question, though. Who is the best person to tell the story? Would that be your parent? Well, perhaps they were when you were a little baby boy or baby girl. But at some point in time, you left home. Somebody else know you better. Maybe it's your spouse, your boyfriend, your girlfriend. When you get a bit older, maybe somebody else knows you better. Nobody knows you better than one person, and that person is yourself. You. You know yourself better. In fact, people only know you from the outside. You know about yourself inside, your feelings that you never told anybody. Maybe it's a part of your history that you don't dare to say to anybody. Maybe something happened to you when we were young. Maybe it's a trauma. Maybe something really happy you want to share, but there's no one there at the time that's worthy of your story. So what do we do? We want our story to be told. But who usually tell people about your story? Who usually does the telling? Anybody else but you. You go and Google yourself, right? Even if you're a famous person, you got about 2,000 hits. 1,999 of them would be by other people about you. Am I correct? Very rarely there's something that you can find about yourself who you told other people about you. And how is one's own story being told? My fabula is about to change all that. How is story being told? Number one, verbally, the story being passed from one generation to another sometime, or by one person to another verbally. I mean, we live in Australia, and one of the oldest culture in the world, 50,000 years. And the way they pass on their history is only through two things: verbal communication and artwork. So they communicate for 50,000 years about who they are, where they're from. The rainbow serpent story is passed on not in any written form, but by words from one generation to the next. So obviously we communicate verbally. Everybody understands that, so that we can tell our story verbally. We also tell our story by having it written down, or in these days you type it. Okay, that's another way to tell a story. In the past, we write diary. Most people write diaries in those days, but how many people actually write diary today? If you still write diary on the, can you put up your hand? Do you still write diary? Well, 1, 2, 3, a very handful. Out of a room of so many people, only 2 or 3 write diaries. Good on you, actually. In recent years, other ways of telling your story, right? YouTube, Facebook, social media allows you not only tell your story in written form, but also in voice form and also in MP4, video forms. And there are some of the methodologies we can tell our own story. But there are problems. So what are the problems? It's a little bit hard to tell your story verbally when you're dead. Usually dead people don't communicate, well, most people don't. It's a bit hard. And secondly, even if you have a diary, unless you publish that diary, unless you distributed that diary widely and everybody wants to buy your story for whatever reason that is, you have a very limited distributions. Only a handful of people have your diary. A famous diary was written 50, 100 years ago, maybe 150 years ago. Only a few libraries in the world would have a copy of your diary. Over time, your own story, even in written form, disappear. How long do they last? 50 years, 100 years, 200 years? That's the time span on your diary, even if it's written down, let alone verbal. Third-party restriction, what's that? Who's going to stop you from writing your diary? Who's going to stop you from telling your story? Well, let me tell you an example, then you will know. Notice this man? Julian Assange. I'm not here to debate whether you agree with him releasing the information he took it from somebody else. I'm not here to do that. Some people are passionately believe that he shouldn't be doing that. He broke the law, and somebody passionately would defend him and said that he's done the right thing. It's called freedom of speech. I'm not here to talk about that. I'm here to talk about what is the truth here, is that he's an Australian. For the last 10 years or so, a whole decade, he's been hounded by another government, not the government of his country. Another government hounded him 10 years and non-stop. He's about to be extradited to that country, and most people believe that he will die in the country. So he released information. He tells the story he wants to tell other people. For whatever reason he did that, he's being tried to stop by another person. My fabula is a Latin word meaning story, drama, tale, and even fables. My fabula, my story, telling it my way, is now made possible by BSV blockchain, decentralized storage, and AI. Let me explain. It enables, using my fabula, enables you to exhibit things that you want people to know. It could be just you're posting about being here at the blockchain conference today. That's okay. You could be a hidden writer. You've been writing about something. So you want somebody to actually share and read your writing. You could be a dancer. So you want to show people you actually know how to dance. Maybe you are a singer. Most people don't know I'm an engineer by trade and a project manager, but actually a singer, only in the bathroom. Only in the bathroom. And you have to buy good tickets to come and see that. Very exclusive. You could be a song composer. You compose songs. You want to put it up for exhibitions, for people to share and to enjoy. So our platform also provides security, of course, being blockchain. One of the cornerstone of the benefit of blockchain is to provide that security. I'm sure the Julian Assange would appreciate. We can time the release of your information. You, in fact, even though we know you as an accountant, in fact, you work for the CIA. And you got story to tell, man. Maybe you actually happen to know who killed JFK. You have data and information you want to share, but not when you're still around, because you get kicked around, chased around by another government for another 10 years. So you time the release of that document. Being blockchain again, proof of original is important. So I don't need to talk to you about that. Everyone around in this room understand the importance of that. Also, it's unalterable. It cannot be changed. Right? That's one of the benefits, again, of blockchain. So this is how our ecosystem works. Just a rough idea. The first stage of our ecosystem, obviously, is a user interface. So obviously, we're going to use a laptop. You can get access to our interface with a laptop, or you can use a mobile phone. That's pretty straightforward. And what you can upload images. You can upload text. You just written a poet. You can upload that. You can simply recording your voice. I just had a terrible argument with my daughter. I am so angry. Why couldn't he understand this? I've been looking after her for the last 24 years, and this is what she's done to me. Or, I just got this fantastic gift from my wife or from my girlfriend, hopefully not at the same time. You can just record that and just store that. Video, MP4, happy birthday, marriage, car accident. That too. Voice to text. Yeah, the technology is very simple now to just record and turn into a text. So all that go into a metaverse. My Fabula metaverse, where we have 4 chambers, if I can use the word loosely, 4 chambers for your purpose. The first one is the auditorium. What is the auditorium for? For performance. So you have done a painting, or you have a poet, or you simply just want to share your experience. You went to a fantastic restaurant, and the waitress looked gorgeous. Not so much about the food. So you can share all that, all right? So you want people to know it's no different to Facebook, basically, all right? So this is where you share your stuff. You want people to see and read. The second thing is called a library. It's a fancy word for a storeroom. Things that you actually do not know how to deal with it yet, you put it there first, all right? You just simply upload it and put it there, okay? You don't have to physically upload, at least the blockchain code is being uploaded, okay? The third place is a vault. Things you put in there that nobody should look at until you're ready. It could be your will. It could be photographs of certain thing. It could be information of certain thing. It could be some private information about yourselves. Things that you want to tell people, you could not. It's in the vault. and you can time the release of that information. The last thing is a memorial hall. This is obviously after you are no longer living, that you want certain information from all the other chambers to be moved to the memorial hall, so that people after you, if they're interested in you, it could be your relatives, could be your offspring, could be people, your grandchildren, all right? Things like in the metaverse will stay there for hundreds of years. So it is up to you what you want people to remember you by. This is our first stage. Our second stage is back-end integration with other social media. Okay, Facebook and Twitter, obviously they might not want to, but this is our intention. Okay. And our third stage is the most interesting one, which I'm not going to talk about yet until another 3 minutes later. Yeah. This is our timeline, stage 1A, user interface. We're going to get it done by end of this year. The second stage stage 1B, the releasing of some NFT, purely to try to generate interest of our project. So stage 2 is linked with other social media application, is Q3 next year. And then stage 3A is the beta version of Virtual Me, and I'll talk about Virtual Me in a minute. Okay. So third stage. What is our third stage? Let me ask you a question. Think of a person who is no longer around, meaning he's already dead or she already dead. Name a person who is already dead that you would do almost anything to have a cup of coffee with. There has to be that person. It could be your mom, it could be your dad. If you are religious, you probably want to have a cup of coffee with Jesus or Apostle Paul. If you are John Lennon lover, you want to have a cup with John Lennon. Think of this person. What happened if you could? What happened if you could? Anyone who was born 10 years ago until the end time would have a digital footprint of their life. The first few years of their life, the digital footprints produced by their parents. The moment they have their own social media account, whatever account, or their homework digitally submitted to the school, they have a digital footprint. And if they live for 60, 70, 80, 100 years, if we gather all that information, and even after that person is gone, we can create a virtual me. Let me show you 2 news articles, and I've got another 2 minutes to finish. An AI created song for deceased artists like Kurt Cobain and Amy Winehouse. They have created music from the information they gather from Amy Winehouse. Artificial intelligence recreate voice of the deceased singer. A Korean AI company studied the voice of a singer. He was dead 25 years ago. He was a hugely popular singer. So study his voice pattern enables them to create a song he's never sung before in his voice. It is possible. So in times to come, I would have AI able to help you to retain your story forever. Imagine your granddaughter able to ask you, say, "Grandmom, I'm struggling with this issue, what's your opinion?" And based on your digital footprint, AI should be able to say that, well, say for example, your granddaughter wanted to struggle with a life issue like euthanasia. Should I support euthanasia? Grandmom, what do you think? And it just happened that your grandmother has posted 3 articles about that, or talk about that in social media or whatever. So therefore, AI will say that I totally object to that. And AI will be able to tell you that there is a 98% accuracy rate. Or something that your grandma's never talked about. But based on other things, they can analyze it and say, well, your grandma will probably return the question in the affirmative for about 62%. It is all doable. But two things needed. Number one, technology, and it's there. We are halfway there. But even if you have the technology, you need one thing. What is that? Precisely, the data. We are going to collect that data. The third stage is virtual me. My time is out. I want to finish with where I started. What's your story? Can your story be told on a plaque like that? Would you want your whole life to be summarized on a plaque like that? And I tell you no. Absolutely not. My fabula, your story, telling it your way forever. Thank you very much.
Thank you, Michael. And I think that's another fantastic example of looking at how this technology can really be used to build things that we've never seen before and to enable us to engage with each other in much better ways. Our next speaker is Professor Dr. Robert Lee. He has a huge list of accomplishments. He's the chairman of the Australian Blockchain Metaverse Association. He's also the founder of a couple of different companies and a professor at the University of Southern Queensland, is it? Or anyway, he's going to be talking about the Australian crypto mining industry future, which I'm very interested to hear more about.
Hello, everyone. Today, I just want to share some information about the crypto mining in Australia. This is some information of myself. I'm the founder of our International Digital Economic and Blockchain DBA project, and the founder of the 518 blockchain communities, and also is a YouTuber. Three topics. First is about the background of crypto mining. The second is about the green energy and government regulation. The third one is about the future of the crypto mining industry in Australia, in my opinion. So, about the background of crypto mining. So, when we're talking about crypto mining, many persons think about the mining machine, the computer, and some factory and the solar farm. But the mining, crypto mining is a process by which new digital coin are entered into the circulation. So mining is a performance. The first computer to find the solution to the problem, receive the next block of Bitcoin, and the process begin again. It is also very important to the infrastructure of the blockchain. We have this topic begin from the next year. You know, next year, China bans crypto mining. China government think the crypto mining is dangerous to his financial ecosystem. So there are many mining machines rebalanced to other countries, to the United States, to Europe, and to Australia. There are many of my students just have mining farms in China for many years and now have to transfer to other country. This is very difficult. You know, they need to go to different culture, different country, and a different government system. This is very difficult, but from that time, I think I need to give some help to these students and help him set up different mining farm, mining factories. This is change of a Bitcoin mining country share. You know, at the beginning, the China mainland, the yellow part is China mainland, and the pink part is the United States. The yellow part, you know, at the beginning, maybe nearly 75% of the share in China, because China can make most of the mining machines. And just begin the 19 May 2021, and there are nearly 50% of the share. And at that time, nearly zero. Now, in China mainland, have nearly 25% of the mining share, all of the road. And in the United States, you can find the pink part. The pink part, yeah. This part. Nearly 37% of the shares in the United States. And the brown part is Russia. This part, blue one, is Iran. Where is Australia? We can't find it. But now, you know. Also, this is very important information about statistic of BTC, BCH, and BSV. You know, to the hash rate, nearly 99% of the hash rate is BTC. And the network nodes, nearly 95, more than 95%. But to the transaction, 85% of the transaction is from BSV, and the block size, more than 99%. Sure, if you want to mining and get more transaction fees from the block, so you need to think about BSV mining. Yeah. So just last week, I just transferred to take some my mining machine to the Gorilla pool. You know, now in the BSV mining ecosystem, have two pools is very famous. One is Tau, but not public, and the Gorilla pool is a public pool. When we're talking about mining, other mining also is very popular. It's about the Doji and the LTC mining. Also, most of the machine is the ASIC machine. In the many years before, when we're talking about LTC, the other reward is Dogecoin. But now, because Dogecoin became more and more valuable, and we always say we mining Dogecoin and get a reward of LTC. Yeah. The second topic about the green energy and the government regulation. You know, to an ordinary miner, he just look for some green energy. You know, this is no question. No problem. They just looking for some green energy and want to do some innovation to get high profit. So this is a project in Europe, in Finland. We buy this property, and it can provide 100 megawatt electrical support. But very interesting is thermal energy is connected to the municipal pipe network. Only 28 meters from the mining factory to the municipal pipe network. So in Finland, all years they need a heating system. So this mining farm can get half of the fee from the municipal pipe network from government, and only can use half of the fee to support the mining. So this is very interesting project. Also, you can find many miners just do some work to make the mining more easy, especially in Australia, in United States, because the home end price is very high, and so some miner just make the container. You know, they can make a container in the factory and take it to a worksite. The container is very different. Some is just for the ordinary miner machine, use air to air cooling, and some use liquid cooling, use water, use some other liquid. And this one is a container. It's divided into two parts. This part is a cooling system, liquid cooling system, and this part can take more than 200 mining machine. Yeah, the totally is a big containers. Also, we can find different use. Maybe you can find you can use a different container to take a different system. But now in Australia, we have set up 5 solar farm mining factories in South Australia, and all of our mining farm was use containers. Yeah. Also, you can find some interest in the cooling systems. For example, this one. Oh, okay. Oh, sorry. Sorry. For example, this one. This one also is a cooling system. This system is use water to get your cooling and take the heat to the swimming pool. So the swimming pool and the fishing industries. So the person can have a very nice swimming pool, and the miner can get Bitcoin at a lower price. Yeah, very interesting. Yeah. Of course, you can find some mining machine. It became more and more clever. This is from the golden shell. This is a quiet mining machine. Normally, the mining machine not very quiet. If you have tried, even you take it in the garage, it's very noisy. Yeah? But this one is very, very quiet. And this also is a box. This box series also is very quiet. Did not use too much electrical power. But if you are a boss, you need to pay attention. Maybe some of you business partner take it in your office. So it's very quiet. You can even take it in your home. You can not hear too much noise. Today, because in Queensland now it's winter, I just have take three box in my in my home. In the night time, it just gives some heat. Yeah. This is other one, very silent mining machine. Is from miner Bitcoin. I see for mining, 8 mining, 8 from 8 machine. This is water cooling mining machine. So how about Australian regulatory framework? So when the ordinary miner just want to find some country to set up his mining business, the first one is he want to find some country friendly and stable. After the 19 May 2021, there are many miners take his mining machine to Kazakhstan. But after half a year, the government changed the regulation. They need to change to other country. This is very difficult. Also, you can find in Iran have many mining machines, but the rules, government rules also changed very quickly. But in United States, in Europe, in Australia, you can find Australia is a relatively friendly and stable jurisdictions for blockchain and cryptocurrency. This is very important. Now, in Australia, we can talk about mining, we can talk about cryptocurrency, we also have big country and have solar energy, wind, water, and some other different kind of energies. So it's a very nice place for Bitcoin mining. We have set up 5 mining farms in the Australia. 3 is in the solar farm, and 2, one is beside a power station, and the other one is in old factories. Of course, I just want to find some mining factories in Queensland. I have looked at this for half a year. I also nearly signed the contract with some power station, but because the electrical price is higher and higher very quickly, so I have to stop. But I think maybe after several months, I can find some nice place to very near here. If I can set up a mining farm near Brisbane, I hope next maybe we can have some conference in Rockseat. Maybe very interesting, yeah. So how about the future of crypto mining industries? I think in Australia, the advantage in energy sourcing and the insufficient crypto mining human resource. You know, in Australia, there are so many different kinds of energy. It's very easy to find it. So it's a very, we have big countries, did not have so many persons, so a very big market. But also, just for there did not have so many persons, so the crypto mining human resource is very limited. You know, some of my students just put the mining machines to a mining farm, and just the fans in the mining machine is damaged. I need to change it. He called for several times, and one person changed the fans, and he need to pay 1,000 Australian dollar. So it's you know, in China, if you change your fans, maybe only 10 Australian dollar. Yeah, so it's difficult. I just want to set up a network for provide maintenance for mining machine and the mining farm. So crypto mining is valuable to Australian electrical grid balance. This is a very important point. I told many persons, told the government. Many people think crypto mining is a dirty business because it can use so many energies. But you know, if your country have many energy but did not have any person to use, it's also a question. You know, we need to use energy when the energy is grown. So, if you set up a system using crypto mining, when the electrical power is used by the other industries, we can stop the crypto mining. And at other time, did not have so many person use, and did not have so many industries, we can use the mining, crypto mining, to keep a very stable use for the electrical power. So this is a very good balance for the grid. I have taught this point for many times. So this is two sides of one coin. Also, this is a very good industry. You know, some of my friends know I have been a permanent resident for Australia for many years. My family was here in Brisbane for nearly 10 years. But I need to fly to Hong Kong and Shanghai and back to Australia every year for many times because very difficult to find international business in Australia. And even I buy some coffee shop, I need to communication, take to some friends. I think it's difficult because my first language is Chinese. But you know, the mining is very international. You just don't need to work, local work, but I have an international market. Because of Bitcoin, you did not know to sell to Brandon, to Michael. You just sell it in the exchange very quickly. So you get it, you get your mining machine, your mining, you work hard, and you get the Bitcoin, get the BSV, and you sell it. It's okay. So it's a very local work and very international market. I think this is a very good business in Australia. We have do so much things. We have set up the blockchain metaverse association to promotion the crypto mining in Australia. We also set up a global crypto mining course for half a year Liz also is a teacher of our of mining course. We have finished nearly 400 students all abroad in different countries. I think maybe 50 students in Australia. And we also participate in establishment of a global mining operation and maintenance network. I just want to help the miner in different countries can maintain his mining machine. We also have some book about the blockchain, about the digital economic, about the miner. But in Chinese, I hope this year we can have a book in English. Every week we have a blockchain meetup. Every Friday, from the Australian time is 4 o'clock p.m. to 6 o'clock p.m. We have a blockchain meetup now online. We also, because I'm a YouTuber, I also have a blockchain diary. Yeah, Michael said diary. Maybe this is my footprint. Yeah, I also have a blockchain diary for nearly 4 years. Yeah, nearly 4 years. You know, from last time, the Bitcoin have a high price. Yeah, if you're interested, you can follow my my YouTuber. Yeah, blockchain Metaverse. This is one of my patents about the blockchain project evolution system. If some friend asks you to invest in some project you did not know very clear, you can use this patent. You know, in this system totally have 1,000 points. If your project can get more than 500 points, that's a good project. If your project only get maybe 300 points, it's not a good one. If you cannot know how to take a point for your project, that means you did not know this project. So, do not forget where you start and why you start the whole journey. With you keep your eyes into the future for big picture and fill your heart with your love and courage. Thank you. Yeah.
Thank you, Robert. And it's great to see that there is such a vibrant crypto mining industry here in Australia. I actually had no idea that there were such large-scale mining farms, and especially it's amazing to see that they are tapping into the green energy. You know, we always hear about proof of works energy consumption being a huge concern, but I think what we see around the world is a stack of evidence that miners will almost always prefer the green, low-cost energy, the unreliable sources that they can grab onto for extremely low rates at the right time. But anyway, we are moving on to our final speaker of today. Lise Lee has been working with me at the Bitcoin Association for about 3 years now. We don't have a whole lot of crossover, but this whole convention came about due to a poolside meeting at the Dubai hotel after a recent conference where she and I got talking, and she told me she was coming here. And we decided to have a meetup, and that meetup turned into a convention, and then that convention turned into a 2-day event with a developers workshop, and all of you here today. So I want to thank Lise for being the inspiration for this event, and introduce her to the stage to talk about building on a scalable blockchain.
Okay, thank you, Brandon. And it's really an honor to co-organize this event with Elas, with Brandon, Ethel, and a lot of friends who's helping with this event, making this happen. Most of you may not know that we started this idea maybe only 2.5 weeks ago. I know it's impossible to organize a conference in Australia within such a short period. So it's really nice to meet all of you here. And also, I know some of you on Twitter, on social media, and finally be able to meet you in person. So again. I'm really happy to be standing here and meet all of you. So I'm okay. For those who may not know me, just allow me to give a brief introduction of myself. I'm Liz Li. I am mostly based in China, Shanghai, and Beijing. And I'm the CEO of KeYiTech, which is a Shanghai-based blockchain consulting firm. And I'm also head of BSV APAC Hub for Bitcoin Association. And as Brendan said, we too work for the association for over 3 years. But I think it's time for us to like promote BSV technology and also expand our influence in this country, starting from now. For the Bitcoin Association for BSV, it's a Switzerland-based nonprofit association. So you can regard it as like an industrial association or an organization. We are dedicated to advanced BSV technology. So every year, every day, we just talk to people, companies, government officers, and even like academia institutes to let them understand the power of Bitcoin technology. And also, as a fully regulated nonprofit organization based in Switzerland, we are also trying to build a regulation-friendly ecosystem. So Bitcoin is not for those anti-government people or anarchists, right? So we want to attract real business onto BSV blockchain. We want to like implement blockchain technology to the real business use case that we have to build a regulation-friendly ecosystem. So our organization also talks to government people, also talks to those agencies who's trying to build the new regulation on the blockchain industry, or you can also call it like crypto industry, so that we don't want people to use BSV blockchain to do bad things, to do illegal things. Also, as a global association, we also initiate a lot of like events or projects in different regions. Let's say like this kind of events, I counted for even in July in this month, my co-workers within with the association, we participated or organized at least 10 conferences and summits globally. So that's how we promote BSV in the correct way. We talk to people with business. We talk to different industries. So after a long day of conferences, you've already heard a lot of people talking about their projects, business ideas on BSV blockchain. So you might already started to realize why or understand why people chose BSV blockchain. But for me, I want to show you some statistics, some real numbers in the real world that show you why they chose this, the only scalable blockchain in this world. This slide, we actually designed this slide early last year. I considered whether I should change some numbers, but I just decided to leave it there because I want to show you. We leave the last circle. Let's see those in the front. We didn't even put BTC in this graph. See, BSV blockchain has already achieved TPS of 5,124. That means on BSV blockchain, the peak, on BSV blockchain, I mean the main net, the peak TPS has reached over 5,000 transactions per second. That's almost hundreds of times of Ethereum, and also higher than Hyperledger, and a little lower than Visa. But last year, we
hoped that we could achieve 50,000 TPS by the end of 2021, but you've seen that we were already behind our schedule. However, this slide was also designed last year, and we make a make a very simple calculation based on the assumption that if we want to process 3.2 million transactions per day, how long it will take for different blockchain networks to process all these transactions. For Bitcoin Core, which is BTC, that it might take 44 days to fully process all these transactions. For Ethereum, it will take 2.5 days. And our assumption last year for BSV blockchain, it may take 30 minutes, maybe 3 blocks. But actually for this year, the BSV blockchain, if we have like 3 million transactions in the mempool, we can process all of them within 1 block or at most 2 blocks. So as you can see, even though we are a little behind of the TPS, the throughput capacity, we actually have the capacity, but we just don't have that many transactions on the network now. That's why I'm shouting out to invite you to build your blockchain projects on BSV blockchain, because we already have the capacity to process all of your transactions within a very short period, but you can do everything on this network. So besides the throughput capacity, I also want you to imagine that if you want to build your blockchain projects, you want to build your applications on the real blockchain, that you have to pay a transaction fee for every transaction. If the transaction fee is high, can your project afford that for the real use? Can your users afford that to every time they just sending messages or put data on your applications, they have to pay the amount of transaction fee? Can your users or your applications can afford that in the long term? But on BSV, we can even transact even 1 cent in a transaction. And the transaction fee is much lower than even 1 cent. Let me show you the statistics of yesterday. Yes, it's just I finished this slide yesterday. So all this data on the first line is from midday yesterday and 24 hours before that. So on BSV mainnet, the transactions of the 24 hours is almost 1.8 million. So the TPS, average TPS during the day is 20 transactions per second. And the data size, I mean, the total block size of the day is 17 gigabytes, and average block size is 112 megabytes per block. And the average transaction fee is 0.00016 US dollar. And I also know some of these transactions, maybe 20% of the transactions, also like some NFT minting or some smart contract. So for like easy, like those simple hash transactions or payment transactions, you can even realize that with a much lower cost than $0.00016. And also at the bottom, I want to show you, that's also the statistics before yesterday. This part is the total size of the blockchain. So as you can see, After 13 years of the network, BSV blockchain has overall 5,102 gigabytes, which is 5 terabytes. And the BTC and Ethereum is almost half of the terabytes. If you want to, we know we should use the blockchain network as a global ledger. We need to put data on the blockchain. So if you want to use a useful blockchain, that you should choose the blockchain that can process or has a bigger size for that. So people may wonder why only Bitcoin SV's blockchain can scale. I think there are many reasons for that, but I just list 3 of them that are very fundamental reasons for that. First, Bitcoin is using the consensus of proof of work. Even though right now there are still many blockchains that using different consensus, like proof of stake or proof of whatever stake, but proof of work is the key component that makes blockchain can really scale. Because using proof of work, everyone, not only miners, not only business, I mean everyone, even for those people who has nothing to do with the blockchain, everyone can just do some simple hash functions and validate their transactions, validate the data. Everyone can do that. Just because of this transparency, this simplicity, that makes Bitcoin blockchain, Bitcoin technology is the most secure system in this world. And the second one, Bitcoin Association, as the developer and owner of the BSV Node software, we have optimized our Node software for a very long time. Such as last year, we have released upgrades for 8 times. And this year, we also released a latest version of our Node software that has adding many new features, such as I remember this morning we have a guest from the university ask about double spending issues. Actually, in our Node software, we have already implemented double spending alarm and detection functions in that, which is also described in the Bitcoin white paper. And last, someone has also introduced the Lite Client and SPV mechanism, which is also a key component for the scalability of Bitcoin. Now I would like to introduce our Bitcoin SV infrastructure website, where if you are a miner or you run business on BSV blockchain, please go to our website, which is bitcoinsv.io, and you can get every technical documents on that website. We have Node software for miners, and we also recently we also released our Lite Client toolbox for non-miners. It's still in a very early stage, but we would like to educate the industry that for wallets, exchanges, or other business, if you are not miner, you don't have to run a full node, and still can allow your users or yourself to validate the transaction that is related to you. And we've got a lot of documents on this website. And the SPV Lite Client toolbox is just what I mentioned earlier, that can allow service providers and users of Bitcoin network to operate more efficiently and leverage the simple payment verification model, which is also mentioned in the Bitcoin white paper. So with these powerful infrastructure tools, softwares, we believe that we can help companies, we can help business that can easily using BS blockchain as a data reference. And finally, this is a project that Brandon has been involved for many years, And for us, we also use this academy and use the curriculum and establishing some collaborations with Chinese universities and also some universities in the Europe and Middle East. So we've already have launched several courses, and there will be 1 or 2 new courses this year. And we are all looking forward to collaborate with some Australian academia or universities here, and we've already have this educational content, and we believe this can help the young people, help those new people who just joined this industry to have a correct and better understanding of blockchain technology. So that's all for today, and it's actually my 3rd time to be here in Australia. So the last time I've traveled here was around 7 years ago. So this time I saw Brisbane changed a lot, but not that lot. Changed a lot. Some new buildings, and I see the city is expanding. It's like BSV ecosystem. We need to building. We cannot achieve a lot maybe within 1 day or 1 year, but we just keep building. And we need builders. And as long as we insist in the right land, right? We put our resources, we put our hard work in the right place, and we'll see new buildings on this place. So welcome to BSV ecosystem. Thank you.
All right. So now we have a little bit of time set aside for any further Q&A that anyone might have, and please feel free to ask questions of myself or any of the previous speakers. If there's any other burning questions that you have. Anyone? Yes.
Daniel, I just wanted to know if you have encountered any pushback regarding the sharing of data between proponents, or if that was ever a part of it, and how you've overcome that. I know that particular government projects, as well as mining projects, are often very private, that data.
Okay, we're on. Yes, short answer. Yes, there is pushback. Actually, from some unexpected sources. Farmers are the ones who push back the hardest currently. On that, if it's incentivized to share it, and it can be shared in a public-private way, by that I mean you can see that there is data there, you can read metadata about it, you can't have access to the actual figures, for example, you have to pay for that. That does ease the data sharing appetite. So basically, user pays. Yep.
I was just wondering if it was to go forward, possibly some ways to overcome that real protectionist of the actual, those data sources. But you're saying mostly it's metadata, you can pay for it. So it's going to take time for that to be overcome.
Yeah, I think education will also assist in that. Data's become ubiquitous. We're actively harvested for data as individuals, albeit personal data or like the sort of information that we record with our mobile devices, and we give that away for free. There's a saying in software development that if the product is free, then you are the product. When you're generating data that is useful and usable, I see it being perfectly reasonable to charge a fee for that. Pretty well, that's what scientists and data miners do for a living. Yeah. So to sort of try and wrap that back up in a nice, neat way, I think education is key, and that acceptance that we do live in a data-driven economy system at the moment. So we may as well try and take advantage of it as individuals.
Thank you.
Great. Any other last questions? Todd? Oh, and then another one here afterwards.
A question for Robert Lee.
Okay, thank you.
Yeah, so if we were to move into a paradigm where there was, say, you know, 1 billion to 1 trillion transactions a day occurring on chain, to what extent do you think Bitcoin miners would be substantially invested in R&D of alternative energy sources that, to what extent do you see it driving a push for delivering cheaper mechanisms for providing energy, and what benefits would that have to society in large?
You know, the energy is the biggest questions. If the first one, you find the lower price energy, and then begin your mining. Of course, you had many things you need to do for you. You need to get a very nice machine, and when you have you can maintain the running of the mining farm. But even go to here, you get the Bitcoin on BSV. You need to know which time you to share it. So if you know now is a bear time. In this time, maybe you can just get the Bitcoin, take it, did not sell so much. And at the other time, maybe after 2 years, you will get a lot of money. So it's a very interesting thing. Yeah, if you like it, other person also, other friend also like it. Maybe we can have some meeting together. We can talk about more details about what we can do in the mining. Thank you.
Okay, great.
Yes, we've got one down the front here for David.
Yeah, just a couple of comments from my fabula. I thought that was really great, but where I thought it was going was more of a genealogy type thing where, you know, currently I can explore some aspects of my ancestry by looking at genes and stuff, but it'd be really cool to see that incorporated into what you're doing here. I would love to see, you know, more of my grandmother's story and that sort of stuff. And be able to look into my family's history and, you know, what commonalities did they have, what common interests and that sort of thing.
Thanks for your comment. We haven't looked at genealogy part yet, but I'm actually starting to look at tribal history. So it's designed for individual. Of course, you're telling your own story. But it doesn't mean that your clan can't tell a story and interlink together. Particularly with culture such as our indigenous people, they have clan, so they can all link together, so they can tell the story rather than just verbally, but they have a traceable record of what they said to each other. Isn't that fantastic? Because I mean, there's an old Chinese saying that if you tell same thing to 10 person down the road, by the time you get to the 10th person, and 20% of the content is probably changed. And we do emphasize on different things, different personality as well. So that will enable them to start tracing and tracking their own verbal story as well. Yeah, but thanks for that suggestion. I think that's worth looking into.
Yeah, absolutely. The other one I had was you were talking about AI and how AI can help, you know, bring some of that stuff to life. The other thing you might want to check out is NERF, so neural radiance fields. So even from single or just a few images, we can actually bring people to life.
That's great.
In
I'd
3D.
love to talk to you after
Go
this.
check it out.
Thank you.
Great. Oh, come on, I know there's at least one more question out there. Yes, down the back.
Actually, it's not so much a question, but a comment. Yeah, I really enjoyed your presentation, and with enough captured data, I even say to my kids, you know, when I'm gone, I'm actually going to be a hologram. There's going to be enough data on me that I'm going to be a hologram in your kitchen, and when you have a problem, I'm going to sit there and be able to talk to you through that issue. You know, with holograms, I remember seeing Elvis as a hologram. I think right here, several years ago, they've got Whitney as a hologram, and then they're doing, using AI, they're doing the singer Selena as well, so she'll be able to walk around amongst her family, because, you know, she was taken at a very young age, but using all that technology, it's going to be amazing what our kids are going to be able to experience. But kudos to you in that project. Yeah, well done.
I just want to make a comment because if people are using it, I want to encourage people to do one thing that we don't usually do in the Western culture. I was brought up in the Eastern culture for 16 years and I migrated here. There's one thing we don't do well in the Western culture is talk to ourselves and talk about ourselves. I like to actually one day might be speaking to Helen. Helen's a psychologist. So I actually want to know that if I start talking to myself and about myself, does it actually help me? I do that. I think it actually helped me to understand me a bit better by talking about myself to myself. And we in the Western culture don't do that. And I think we need to, I mean, we think it's crazy you talking to yourself, right? I mean, it's not. It is not. We don't spend enough time by ourselves, thinking about ourselves and talking to ourselves. So with my vocabulary, I want to encourage people to actually start talking to yourself. When we do that, you talk about your feeling. I'm really angry today. Robert actually upset me. I mean, only joking. Robert is a great partner and great friend. So if something happened today, I just want to talk to myself, and it's recorded. And it forms a digital profile of not just about historical record of what I said and written, but about how I felt. And that's important, I think.
So who thought you were going to be getting psychology, philosophy? That's right, yes, very much so.
Yeah, Brendan, I was just going to say thank you to you, yourself and Liz for organising this event here. Like, I've been in the crypto space for quite some time and having navigated the whole hash war and whatnot, just seeing what Bitcoin SV and the Bitcoin Association are doing right now for the community and business alike. It's amazing to see, and yeah, just love seeing innovation happening here in Australia and Brisbane and whatnot. So yeah, thanks for organising.
Oh, my pleasure. Well, I'd just like to thank the host of businesses that we were able to reach out to, who all jumped into action and got here and prepared talks. And you know, 2 weeks is not long enough to arrange a conference, and yet we did it. Lise set us a challenge, and I want to thank Ethel. Stand up, please, Ethel. She's really the main person doing everything here. I'm just show up on the day, but no, it's been a fabulous experience. I think we're going to do this every year. With the developers workshop tomorrow, I'm quite excited to get some of the local development talent onto the tools. Some of the tools that we will be testing are built here in Queensland. So, you know, I'm very proud that we can present such a great set of companies and utilities to the industry here in Brisbane, and I really look forward to you guys loving what you see. Yeah, so thank you very much. I think that's about it from me. There's going to be a networking function at 4 p.m. Outside. We're going to have a bit of a drinks package, so in about 10 or 12 minutes. Yeah, and that's it. Thank you very much, everyone. I really appreciate you coming today. Yeah, so someone has just suggested that we take a group photo, so I would love it if you could all come up to the front and